favorite rock. Rocco, 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 our favorite rock. Rocco, 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 our favorite rock.
What is going on? Uh-oh. Dang. How's it going?
It's going well for me. How about you, Dan? And how about you, all the viewers?
Nothing happened today. I don't know. Nothing at all happened.
Today was a fun day.
Yeah. Oh my God. The stories, I don't even know how far to go into it, but where do we even start? I guess we'll have to wait till victory celebration. But so how did you found B. Riley, right?
Yeah. Other people found it, and I thought that there was more time to be held, and like the catalyst for me was the long delays, and then that gem of a 10K that they finally released. Like eventually, that's how that whole B. Riley thing got started as a bearish idea.
Interesting.
Yeah.
And then who dug it? Okay, so then we all got into that, and then did you or who looked through what they actually had investments in? The joint effort.
It was a joint effort, but like the heaviest of lifting seemed to be Andrew, and as far as like identifying a particular company, that was definitely Andrew.
Okay. Oh dang! No presentation. Yeah. So, did you see what that guy did, Mr. Portman?
Yeah, I saw.
Okay.
That poor guy.
We got to show this. The lore. Okay. Let me pull it up.
Guys, I'm getting absolute.
Okay. Let me pull it up. This will be gone over in the future at some point.
It's gotta, like, I get some people love like non-fundamental things like flows and technical analysis, but at some point, like these details matter.
It's hilarious. Okay. Wow, I cannot pull up videos to play on. Okay. Sorry, people. Maybe that'll work. Okay.
I'm getting absolutely chefed up by Cons right now. We got some bad news coming out. They're hiring advisors. They got a delinquency notice from the NASDAQ. Not good stuff. You can see my position up here, but I'm diamond handsing it for now. On the bright side, Capital Mindset is featuring me as a meme, rightfully deserved, as I'm getting absolutely milked. Hopefully my money is going right into his pocket. Because if I'm going to lose, the least I could do is be some entertainment for you guys. We got one more over here. My friend sent it to me. I'm actually super surprised he found this. Share it with you guys. Maybe you get a laugh out of it. Guys, I'm getting
This poor guy. He's gotten wrecked. He's in good spirits for losing like, what is it, $18,000 so far?
Yes, yeah. And
oh my God, I don't even want to say what I would do. I don't know, right? Who knows what you do in this case where, I mean, I did not lose. Like, worst investment I've made last few years was BarkBox. It was not it was not 18,000. So it was under 10,000. So holy shit.
yeah,
But I cut the cord. That's why I've tried to teach. Like, at some point, I cut the cord. What management was telling us at some point did not match the financials, and I cut and ran. And I think I wrote it from about 9 to 6. So if I had been a stubborn prick and said diamond hands, Rolo, oh yeah, I know everything, It was a penny stock. It was like an 80-cent stock, right? I think it's rebounded this year a little bit, but BarkBox, I would have been devastated if I had been a freaking, prideful dick and just refused to listen to other people. So I don't know. Everyone learns this lesson, I suppose. So, and PayPal people are learning this, and I'm eventually SoFi people will learn this lesson too. That you're just wasting your time. Hopefully you're not losing a lot of money, but time is money too. So, oh, this guy. So a lot of people have been talking to this guy in the group chat. Okay. I got to show you that. Okay. Before serious topics. Okay.
Yeah.
No.
Well,
I usually don't specifically talk about this guy. I've just been making fun of Tesla. I know Strongman has, but
oh, Dividend high yield warrior.
Oh,
Hey, Jesse.
What's up? Oh shoot, I'm not like logged into StreamYard.
Oh no.
Weird.
This is the
Okay.
new exit liquidity. The one
Yeah.
that doesn't buy expensive stocks no one's talking about. So,
That's right.
will those jokes ever die? Probably not.
Nah.
Jesse'd
Definitely
be like,
not.
hey, I really like CrowdStrike. They're doing great. And he'd be like, oh, how about Fortinet? It's like, can we talk about CrowdStrike? Like, I don't want to talk about this other shit. Oh, you looked at a chart.
No, it
Doing
had to
well.
be a Canadian company though.
Yeah, Park.
You're like,
Well, actually, Park Lawn was shit, and then it got bought. So,
Oh, it did?
Yeah, you didn't. It got bought out. Private
Oh.
equity bought it.
What did it go for?
Do you know Bacon?
I don't, sadly.
Let's see. I'm gonna look it up real quick. 1.2 billion take private deal. I don't know what it was trading at though.
Oh my god. There was a specific video clip I was trying to find. Okay, let me go up a little bit. Dang.
Oh dang, yeah, it rallied it
did
was a
not do well.
50% premium on the
Mhm.
buyout. But yeah, he was talking about in the 20s, right?
Okay, it was this one. Okay, I found it. So this, okay, so go to 23 minutes. So to preview, so a lot of these yield max people, what they do, they buy a yield max fund. It's fast. I love watching this at this point. It's so entertaining. Oh wait.
Hey, there's an Andrew.
Hey,
What's going on? Oh, let me
The
make
man,
sure
the
my
myth,
mic's
the
coming through
legend.
the right way. Hold on. Headset.
Yeah, it seems like it's good.
Okay, perfect.
Yeah.
This will have a sip. This goes to Andrew.
I'll raise my water.
Water.
I mean, I maybe am up like 8. You're up about 10x more than me, I think. What?
And probably on a much smaller portfolio. So
Yeah,
Wins a
I
win.
thought I was done this year. I'm like a 300% return on the spec. I
Mhm.
pulled taxes aside already, so I'm kind of actually short on cash. But this worked out well. So, with Conn, but well,
The
anyways,
only
before we talk about I remember I put this in the group chat. So
Oh,
these
no.
people are so what they do. I mean, we're all watching this. What these high yield warriors are doing is they buy a yield max fund, and as soon as the payments start to drop, and they don't understand why they're dropping, they sell them, and then they say just buy the ones that have higher payments. So we all know what they're in. They're all in these crypto funds right now. They're all like extremely heavily invested in crypto, like Coinbase, the NVIDIA version, and the MicroStrategy version. So this guy, you just have to hear this, people.
As long as they're winning the majority of the, of the,
Okay, we'll go back.
that'd be pretty opportune.
Yeah.
And you don't know. You just have to watch and see and
He'll say it in a second.
pick your fight.
Well, like it's been said on here, as long as I don't know, I haven't tracked Misty and Coney lately, but as long as they're winning the majority of the, of their weeklies, for me, that's pretty important. That's a huge criteria for me. I know it is for others too.
See, like today, I had a lot of, I had over 5,500 shares of Misty at 34
5,500 shares of Misty. Okay.
34.45 or something like that.
That's your
And
cost basis?
So 34,
Yeah.
mid 34s.
34.45. And what I did, I sold it. Now I could buy it back tomorrow for $6 cheaper.
Did you?
Well-
So he had 5,500 shares. 5,500 shares of this at 35. He bails on it because it went down, and none of these people know what they're investing in. They can't handle the emotions of red. And he says it's cool because I'll just buy it back at 29 the next day. So he said $6, 25 or 5,500 shares. So he wiped out approximately $33,000 gone. Like just gone. It's mind blowing. And he's gonna, if he buys it the next day, you're not even gonna get the loss for taxes if you buy it the next day. So
Gotta love it.
yeah. That one stunned me. I was like, just so casually. So we've just casually just burning destruction of capital. But
It's like $190,000 investment.
That's what retail specializes in, though.
yeah.
I mean,
They can't handle red. Psychologically,
or they can handle it too well.
I was gonna say, I don't know.
There's literally there's
handle it
gamblers and there's like people that don't know what they're buying.
Mhm.
That's what you like, and we know who the gamblers are, and we know who most retail is the people that can't stand red. So
yeah, like you said, they either just gamble away and they just used to it and they're numb to it, or they literally just they can't handle it and they just bail as soon as they can.
I feel like some people like that Mr. Portman. I feel like to him, like it's not real. Like it's just numbers on a screen. Like I think that's the only way I could rationally like do that.
Mr. Pope, man, dude, I can't believe he referenced Fabio's.
Dude,
Who sent
so
that to him? There's no way his friend sent that to him.
Oh, Fabio does have a Twitter.
We got spies. That's somebody snitched. I think it was Jake.
Oof.
Jake snitched him. So for people watching, where did this all start? Let me find it.
I forgot who found
Was
him
it this one?
originally.
There's me. I did.
Yeah.
Oh, okay,
Here-
yeah.
I
Oh,
scooped
yeah,
up
that's right.
23,441 shares of Conns towards the end of the market day today at an average cost of $2.39 a share. I think they're severely undervalued with earnings on June 25th. I'm hoping for a run up before. If not, I'll be happy holding for now. I feel really good about this one, maybe too good, but I'm super excited.
You did feel
So we'll
so good.
see what happens. I scooped
You have to talk to this man someday, Andrew.
I will be able to keep a straight face. And I tried to like be like, dude, get out. Like for those that don't know, I like commented being very respectful. I wasn't like
No,
trolling.
we
or anything.
did. Like right here. Like we were like,
Wait,
get out.
scroll down. Am I down? Oh, there I am. Right there with the 8 replies.
Yeah.
And I tried to like explain and then there was another one. I think YouTube blocked it maybe. Like it had it for review, but he didn't respond or anything, so it just got deleted basically.
And we were like, get out, dude. We're just like, you really need to get out of this. He's like,
yeah.
no way, dude. Diamond hands. So and then the people piled in. Probably. Are you buying the dip? And then people are like, you're going to use leverage. And then he was it aggressively safe. Yeah, here it is.
If I had to do another trade on Cons today and wanted to be aggressively safe, given I already think the company is under.
There's no such thing as aggressively safe. What the fuck does that mean?
Yeah, those are like antonyms of each other.
For people
Almost.
watching, he says things like free money, which is great. That's any YouTuber that says there's free money in the market, good luck. You should just unsubscribe. But aggressively safe. Like, I don't understand the logic here. Like, I don't know. Like at some point, like even you look at this thing and you're like 400 million of assets, I think is what he kept saying. And it's only on a market cap of 50 million. Your brain should go, that sounds too good to be true. And I know I'm not like smarter than the market. So maybe I should think about what I'm not seeing here.
I don't know if I'm smarter than the average bear even. Like,
I know I would be like, I am not that good of an investor to like, okay, something I'm missing. What he missed probably was the whole credit risk. I don't think he ever mentioned credit risk in any of his videos. He was just looking at like the balance sheet and the chart. So
Yeah, but
the
also
story
have,
of
like,
credit
what?
risk wouldn't have really shown in that, I don't think. But
They have what, like 800 million in debt, right?
No, 1.1 billion.
yeah.
1.1 billion in debt. Okay. Yeah. So,
But even
Yeah,
like,
that's if you're including their securitized loans, but like 1.1 billion.
I didn't piece it all together until I rewatched the video you did with like 2 weeks ago. Because I forgot that they had filings about the line or the loan, the term loan. I forgot that part. Because I was trying to put it together a few weeks later, some of the pieces you talk about.
Well, that's why I was looking at this, and Fabio and I were like messaging like, dude, this is a last resort loan, and they're already pulling on it. Like, I think the revolver got turned off. We're like, holy shit. And
because I remember, go ahead. I'm sorry.
No, go ahead. I was
saying what I saw when we brought it up at first. The first thing I noticed was the revolving credit line was, and then how much they had pulled on it, and then at the top of the fucking thank you, it literally says our business relies on having revolving credit to fund our operations of our finance activities. So it's an essential part of their business, and they were almost tapped out of it.
Well,
so that to me, I knew that. I didn't know the term loan part. So Andrew put that together for me. But
yeah, I was like, oh my gosh, they're pulling on this. And like, it's funny because for those that don't know, the person who, if you ultimately want to go back to the person that put us onto this was Bacon Memes, ultimately. And so if you go back, like one of the things we were looking at this via Riley, and kind of going down the Riley term loan, and I was like, holy crap, that's a shitty loan terms. Like, that's terrible loan terms. And I started looking, I was like, oh, these are even worse. And then we started listening to earnings call, and it's funny because the CFO is like, well, we have 150 million we can pull on our revolver, and then we can have a delayed draw loan as well. And you're like, wait, they're already pulling the delayed draw loan, which means they either already pulled on everything, or they got it shut off, or it's just like terrible shareholder
Capital allocation.
Which is like probably just grounds for a lawsuit, so you can't really do that. Man,
yeah, beautiful.
The timing was just perfect too, honestly. Like,
it was.
Now the part though, if you didn't do the research and like say someone just followed us into this, like for like what 2 or 3 weeks, I was either red or breaking even. So
yeah, I mean,
I was down actually, I think 20% at one point
on puts.
So, yeah.
So
the price was continuing to trend down. Well, because it went to 2 on Friday, and then when it went back to 230 on Monday, I got wrecked on Monday. And I think if you didn't do the underlying understanding of what it was and were confident, or honestly, if you can't handle red, which I think a lot of people don't appreciate the fact that you can't psychologically handle big swings, you should stay the hell out of options, definitely. Let alone swing trading.
It's so funny too, because when they had that little, and at that point I was already so far up, but they had that little pop. It was from like 230 to 260 intraday, maybe even. And I thought it was so funny because the reason it popped initially was because Aaron's got acquired. And Aaron's is a fundamentally different business than these guys. Same
Yeah.
consumer, very similar aspects to it, but they don't carry the credit risk. And
Yeah.
so that happened. I was just kind of like sitting there kind of laughing more than anything.
See, that was my concern. I told when you first brought me to Conn, I said I was worried PE could buy it because it's a crappy company, but it's a good business, I think. But then when you like, oh no, credit. When I understood the credit part, I'm like, okay, there we go.
Yeah,
I
I
was
don't think
that's
the
part.
PE wouldn't even want to take on like actually acquire that type of credit risk and debt.
Right. No.
My issue was like I just didn't know. Like it was kind of obvious that they were screwed. It was just how long could they like, keep afloat? Was this going to be like a couple month thing, or was it going to be like a year and a half? And like the timing risk for me, I was just like, oh god, like how would you play this with the timing risk? Because you don't know if they're just going to like putt around for 6 months to a year.
That was part of the reason I liked the direct short on this, and I actually just had shorts, like regular shorts, because there's no cost to borrow, and I didn't think it was going up. And then like for me, once the shorts like came more and more in the money, or you could get more aggressive because you have more, I guess, margin of error, so to speak. One of the things though that I am looking at moving forward, and the one thing you can look at this company and think, and I think I've already answered the question myself, but if you pull up a ticker, look up RGS, Regis. If you can pull that up here, if you want me to, I can present. So look on like a 1 month chart.
Oh,
Very nice. Randomly.
Wait, why they don't have a 1 month chart? Whoa.
Yeah. So this is a company. Now, if you look at the market cap, still super small market cap. I'm sure if you got like a 5-year chart, it's still absolute destruction.
Very nice.
And so it's not like, so one of the things you would want to watch out for in this, but I don't think it's going to apply to Conn's, and I'll explain why. So Regis was in a similar situation, debt restructuring, all of that. The thing was they came out of it. It's kind of like a Carvana situation where they came out of it ahead on their debt. So the people that were giving them the lines of credit actually refinanced it favorably for Regis. So that basically, because they're looking at it and saying, well, we want to get something back, right?
Yep.
The difference, though, is that Regis had positive operating income. And so, and they're like a hair salon company. I don't know. Maybe they own brands. You guys, I don't know anything about them.
Okay. Yeah, I know the hair salon I've heard of.
Okay. And one of the things I still look at them and go like, maybe you just shorted again. Like, holy crap, these guys still might just be dead. I don't know. But because they still have like 500 million net debt, 17x LTM net debt to EBITDA. But from what I saw, they have positive operating income. And that's a very big difference to Conn's, who does not. Because you need operating income to pay interest expense, to pay debt. And I still think, it's a place to look at potentially for a short, though. And I'm not Regis, but I don't know. Maybe, I haven't looked at that much. But I just gave a brief overview and said, they might still be screwed. This might be a lifeline, but we'll see how long that lifeline lasts. But anyways, what I'm saying is that's the one thing now I think to look out for with Conn's. That's the one part where you could maybe get killed. Not killed, but you could get hurt if you're short this.
Yeah. Well, I mean, especially if they had a jump like that, right? They went from like 170 to like $5 or $6. Just
but you got to think too with Regis, they grinded down, 70, 80%. So if you go to 1 year, they're still red on a 1 year. But and definitely are on a 5 year. But no, that's the one thing that I'm still looking over my shoulder for.
Yeah,
that's the problem when you get this low, is that
exactly right.
Players can come in that weren't a factor before.
It's like if it goes to 1, is the risk of holding and trying to get it to go to 50 cents or 0 worth like the risk of
No,
maybe some like type of debt restructuring or some
right.
edge case, and then you just get totally blown up.
Now with Cons, I mean, I think this won't happen. I think they are completely dead. I mean, I'm guessing I would have to look at Regis. Did they at least file stuff on time?
Very
But
high
that's
bar,
also-
apparently.
It's also why you can take long side hedges, right?
Right. So I have
counteract that.
calls. I have far out the money calls that are fairly short dated, like August and October, against all of the short positions I have. But well, they didn't file an NT 10Q. They just filed a regular 10Q, like a functioning company. So they're doing better on that front.
I can't believe though, Cons literally sat on the delisting notification for 6 days.
No, I knew they were going to do that. I thought you had to do it in 5 days. I didn't realize they could do it for 6. But
Hilarious.
yeah, at least Reed just like filed all their reports on time. That's positive.
Unbelievable. Yeah.
So,
Good stuff. Good stuff.
It's crazy.
Yeah,
Oh,
that's like Crocs. I bag carried Crocs for months because I bought it in the summer of 23. I was in at 110 and then it dropped 70, 80. And I'm like, oof. I didn't double down or anything, just held it. And
I mean, yeah, like this one was like there was definitely an element of luck baked into this where as soon as we started to go short for the most part, this thing just went kaput.
It collapsed. Like all the catalysts came at the right point.
Right.
I still preferred puts over commons just because you don't have to worry about hedging like a reverse case.
yeah, because
and
you knew what was on the table from the start.
It's like really, really defined risk, at least on puts.
Mhm.
And you don't have to have a hedge against them. And then additionally, when it does crack, a lot of times you can get crazy amounts of IV increase.
Right.
Like
You
I
get the IV.
took some of mine off just because like the premium, the IV increase was so drastic that it would be like executing them at like $1.20 or something like that.
Mhm.
Right. And
But,
I was like,
like-
well, shoot.
At the time that they first went into this, I thought the play was shorting it though because there was no volume in the options, any of the option lines, and then
Until that one
Now-
day
now
when I
it's
was like, guys,
yeah,
have you seen
like,
this?
if this happened to shorting the stock, I mean, you could just wait it out, right?
That was
just
wild though, because it was like 1 week where all of a sudden options volume on cons just like opened.
As
And
soon
it
as
was like,
How-
what?
was it you? I think you saw the 5,000 or open
Yeah,
interest,
I
and
was
I'm
like-
like,
I was
it's
like-
on, boys, it's on now.
Yeah, 5,000 contracts just traded at $2 strike. I was
The
like,
problem
it's
is if
on.
you're the
It's
first
happening.
in, what if you buy the wrong strike and it gets no volume? And
Yep.
and I've seen it before. The stock does
Yep.
what you think it's going to do, but you bought the one that has like no volume, and the price might even do the opposite of what you think of it.
Yep.
But it's the same idea of if you had 50 people bidding on something or 5,000, you could have 50 psychos potentially, and they just mess the whole thing up.
Oh yeah.
Yeah.
And the market can be irrational on both sides, right? Like,
Yeah.
yeah, it might deserve to go to zero, but you know what? You don't know if something is going to happen, and this thing pumps for whatever reason.
Pump it.
Yeah. I mean, we could start talking too about how this rolls into B. Riley, though. It's not good for them either way.
No.
Oh, that one's that's a monster of a topic.
So how does this snowball keep going?
Well, because B. Riley has, I want to say, roughly 300 to 400 million of exposure to this. So B. Riley directly has a $95 million term loan. I don't know. I mean, potentially Cons has paid off some of it, but I doubt it. Nothing material, anyways. And then you have to factor in FRG. FRG is, I'm going to call them a subsidiary of Riley. That's like technically incorrect, but also technically correct. It's kind of complicated. And so FRG has a loan, but it's securitized by Badcock receivables, but I don't know how much of that they're going to collect. but it's like 160 million loan, more or less. And then there is the preferred shares, which they had stated equity of 70 million as a last 10Q, or actually last 10K probably, or like whenever they did the deal. So you take let's say 70 million plus 160 million, 167 million, I think technically. So that's 240 million plus, we'll say 100 million. So like 340 million, or 200 or 335 million is roughly what I'm getting. From what I saw too, this is bad because FRG already looks like a distressed asset from the little bit that I've seen. Let me see. I want to say their bonds. Someone was saying their bonds are trading at like a 30% yield. Which, if that's the case, the bond market is saying you're a dead company.
Yeah, I was gonna say that's bond market pricing it for destruction.
Mhm.
Like,
and here's the thing that's also here's the big kicker too. The way Riley does debt, I don't think people understand. So Riley, okay, asset-backed securities. Go watch our video on it. Two Accountants, One Gap, because Riley does it as well with their loans. So Riley takes loans from Nomura. I think it's Nomura Bank is how you pronounce it. I don't know.
Yeah, I think so.
They're a Japanese bank. And so what they do is they actually securitize all their loans. So they get loans from Nomura that are asset-backed loans that are backed by loans that they have to loans and equity. So they took, for example, that term loan. From what another person told me, that term loan is they had like a 80-90% chance that thing was securitized, which means if that's the case, then Riley would have to bring money to the table if that becomes in question. They also had equity and FRG securitized and take a loan out against it. So if your equity comes into question, not only does that equity go away, which that is why, by the way, unlike the 10K and on the auditors, unlike the audit financials, why there was such a big argument with the auditors over valuation methods of level 3 securities, because Riley didn't want to mark anything down because you have those securities, those equities securitized, and you have loans against them. So if they get marked down, then you have to bring money to the table. So basically what's happening is you're saying we have all these assets, we have loans against these assets, and now all these assets are falling apart. It's like I take a home loan and I say my home's worth like $200,000, and then you come and see I have a cardboard box and no land, and you're like, that's not $200,000. Now you have to actually give me money to make me whole. And how are you going to deliver that? So that's kind of what's going on here. So if you picked up, that's why when this announcement came out, if you look at Riley's stock got cratered. I'm also short Riley's stock for what it's worth. That one by puts, so I don't want to pay that interest. I'm lazy.
Yeah. It's expensive.
How much am I up on these things, actually?
My degenerate ones, like in hindsight, I did it wrong. I think, Dan, you probably did your B. Riley bearish better than I did. But I finally hit some profitability unrealized.
Oh, yeah, I got in at like 29.
Yeah, I'm up like 60.
Like the day or two before they filed, and then it rocketed to 40.
Yeah. So
dude, that was such a good entry. Like,
I know I
obviously,
missed that
by
entry.
2020, but I was like, oh, it's rocketing. But I eventually, I think I covered my Riley position and I rolled it all into Conn just because I thought it was a better setup.
It is better.
Yeah. A better immediate setup. But I think I don't know. Riley could be really fucked too.
You know, Riley could be. That's what I'm saying. The leg 2 of this is looking at
it's gonna collapse.
Yeah. No, I mean
dominoes. It's just like,
well, that's it. And this is actually something Bacon. We've talked about it in Capital Mindset, but Bacon, myself, Fabio, is that once Conn falls, is that the domino that starts to push everything over because nothing can still be held together. Which, if that's the case, really interesting deal to sell that Badcock company off. Man, that asset must be so toxic, by the way. Like, holy shit. But
do they have a
It's like Badcock and Wilcox or something like that. I don't know.
Yeah.
Wait, this?
No. I'm sorry. No, Badcock Home Furniture. I'm sorry. Riley actually, believe it or not, is involved in that company too. I don't know why that is, but yeah.
To buy more home furniture. When
Yeah.
You can't make money selling furniture where you are.
No.
Same store sales were down too. I remember looking at that. So
Well, one of the things I pointed out was the low-end consumer is also getting crushed right now. If you look at like Dollar General, you could have looked at Aaron's. I want to say Dollar Tree even. I don't know. I had pulled a few things. I can't remember who I pulled it from in my write-up. Looking at the people I thought appealed to the same consumer. And they all said the same thing. Oh, I think I looked at Kohl's. I looked at Five Below, a bunch of things. And they're all saying like our consumer is not buying apparel and they're not buying appliances, but they're spending just as much on consumables, which makes sense.
yeah, Kohl's got murdered on earnings. Yeah.
Dude, and Kohl's is actually a little bit of a higher end consumer, I would argue. But it was interesting, just their commentary still was like our highest end consumer is fine. It's like their middle income, which I don't know how they even tell. I guess they have a way.
There's loyalty programs and perks that
Dude,
give them a little bit of granularity.
I love the picture of that dude just eating there. Like, look at me, like, smack on that, right on top of that finance table.
You know what I like too in Conn's? They described in the filings how they take delinquent loans that are like past due and they repackage them.
Yeah,
after they negotiate a different payment plan or timeline with the customer, they then revalue it.
Right.
And I'm like, this is kind of sketchy. I'd have like when I was reading it, I'm like, well, who's deciding the valuations now? Because that'd be my question. Like, if someone's not paying, you know, so Conn's they run their own finance department, so they call them, they make them an offer to get some value back, right? But then it's like, well, what's the value of that loan now? How are you writing that down? Or are they writing it down at all? Because they could say, oh, look, it's still an active account. We're getting payments from this guy now.
Right. And
they have these predatory loans for people where it's like zero interest, but it's not really zero interest. The interest is just waived. And if you don't make all your payments, they don't waive the interest.
Yeah, it's one of those things where if you don't pay in the first 12 months, then
yeah.
Which I've done that before, by the way. Like I've taken those deals, like Best Buy had that once, and I just paid it all off in the year. I was like, because I could have paid it all up front, and I was like, oh.
I do it for like windows, like the window company. I'm slowly replacing my house's windows, but yeah, it's like 2 years, no interest. So I'm like, yeah, why not? You know, so for like $5 or $6 grand of windows. But interesting. Yeah. Crazy. They finance this all themselves in-house.
Yeah. So
then they package the debt in these VIE notes.
There it is. You got it. You pointed it out.
That's the other problem I didn't like reading or just refreshing myself today. Yeah. The repackaging of the notes and then taking delinquent accounts and bringing them back to the table. And this is weird. It's all in-house. That's what was surprising me. All of this is in-house at Conn. I was I'm like, nobody does this all in-house. Why would you do the debt collection yourself? To me, it's like once you write it off, just get rid of it. Get it out of here.
And that's what Aaron's does.
Mm-hmm.
Aaron's doesn't do the actual.
Hilarious. This will be a fun ride. So
I just want to say this has been so fun. I think in the Capital Mindset community, we just close the Hall of Fame, say this is it, this is the top. And just realize that we're in the good times.
Better.
You could have theoretically, if we obviously knew everything, you could have rolled Perry from 23-ish to 8, closed it, went into Conn at like $3. And then today, oh my God.
And they say shorting or bearish people are dead.
Hey, we all had versions of that.
Well,
nobody timed that right. So
I feel like the narrative that like bears are dead, it's because that's more like macro bears, and I mean, because those are like the sky is falling kind of people.
No, yeah.
Because I
Yeah,
gave
definitely.
so I gave was it Two Stupid Guys Trade Stocks, I think.
Hey, good old awful coach.
I like these guys. I would love to talk to them someday.
Who's this?
Two Stupid Guys Trade Stocks.
I've never seen this.
So they're like, I don't know. He does like charts and swing trading. They're not bad guy. They're rational, but so he does this video. He shorted Nvidia, right? After he was he made fun of Paul for shorting or for doing his silliness with options. Now he does it, right?
How did he short it? How did he short it though?
I don't think he said.
Okay.
So I'm not sure, but he got hell in the comments from a lot of people. I kind of gave him hell too a bit. No, it's because he's like, because we're all like, well, why are you shorting it, right? He had no bear thesis. He had no like. He's just like, it's expensive, and we're all like, that's not a great reason to short a company. And you just made fun of Paul for doing the same thing that you're doing. But then his next excuse was, well, it's only a very tiny part. It's like 0.2 of my portfolio, he says. I'm like, is that really a good excuse too? Like, that doesn't change the fact that you're shorting a company on valuation only. And a lot of people have been wrecked on trying to guess which direction friggin' Nvidia is going to go. So, but nobody learns anything. But if he makes money, everyone thinks it's right. I'm like, I don't care if you made money. It's still the wrong. If you do this repeatedly, you're going to just be 50-50 probably.
Process versus outcome. Yeah. Like,
and like it got cheaper. Like people, if you look at a stock chart, if you're like a chart TA person, you would look and say, oh, this is crazy. Look at how it ripped and all. But like Nvidia got cheaper as it went up, like, which was wild. Like the income was out accelerating the stock price. So it was unbelievable.
It's insane, actually.
I'm curious what if he is going to follow up with this now that I think he said he closed it now.
I'm going to head out, guys, but y'all have a good one.
All good. Thanks, Andrew.
I wanted to stop by and say, well, we'll see what happens tomorrow with Cons.
Yeah.
And now we'll have to have some internal discussions on the best way to play this moving forward. In regards to B. Riley and seeing like what we think of that. But anyways, see you guys
later.
All right.
What a wonderful day.
What a wonderful day. It's hilarious because portfolio hit all-time high for me, and it was down on the day, but like because of yesterday, like it's still like is perfectly all right. I'm happy. I'm a happy day. I'm a happy guy. Wonderful day. Down day for me. Who cares?
All right. What should we talk about? Should we talk about Rivian?
Sure. Yeah. That sounds good.
What does Jesse think? How much Rivian did you buy?
I don't even know what you're talking about. What happened with Rivian?
So Rivian went into a $5 billion deal with Volkswagen.
Okay. Yeah.
And it ripped like 40% pre-market. I think they were saying so they didn't get like the $5 billion up front. It's probably more like $1 billion. It's an agreement to work together. The problem is like it doesn't solve. And we did a Rivian episode a few months ago. This doesn't matter to me. Like this doesn't matter. All that matters is they get to the point where they can make cars profitably. Like that's all that matters at this point with Rivian. And they said in the earnings calls, by the end of this year, they'll be profitable on a per car basis. So this could be positive though, because this gives them more capital, and you would assume expertise by one of the best car companies in the world.
Yeah.
So,
could be good.
Assuming that the joint venture works, and like the theory is what like the joint venture should help like lower unit costs, and if that is credible, then that gives them a fighting shot for a better bottom line,
Mhm.
a good bottom line. So I mean, maybe.
Well, so what's VW getting in this?
Do
we know?
Ownership in a joint venture, I think.
Okay. Because I'm sus.
Yeah, because
sus right now.
Rivian also like fronts up some licensing of IP.
Yeah. Yeah, because if they get potential it makes me think that VW could be giving them a partnership with up to 5 billion in capital. That 5 billion in capital is probably going to be dependent on certain stipulations, certain things that Rivian has to hit. And if Rivian goes to zero, this might be an IP grab from Volkswagen.
Ooh, interesting.
Because Rivian's bleeding cash like bad, like really bad.
Yeah.
So if Volkswagen is like, yeah, we'll partner with you and help you out, and that money is tied to stipulations of certain, financial metrics or sales metrics or something like that, and Rivian goes the way of death, then Volkswagen could have rights to all their IP.
Okay, their website sucks balls. Like seriously. I can't find anything.
So I would be curious to see the specific details of the partnership.
Yeah.
Volkswagen isn't just going to be like, yeah, you're a great company. You're not making money. You're bleeding capital. We're going to give you 5 billion. I think like you got to look for what's Volkswagen potentially getting out of this.
This is interesting. Yeah, I remember when we looked like in the first quarter, they were losing, was it $40,000 a vehicle? I think.
Yeah, it was
crazy.
pretty ugly.
They sell them for like
like
70, and they lose 40,000.
Since 2021, their cash and short-term investments has gone from 18 billion down to 7.8 billion, and their debt has ballooned from about 1.5 billion to 4.5 billion.
Seems like it.
So I would want to see, because I looked at the articles briefly and it said up to 5 billion in capital in joint venture, and I am very suspicious.
What makes me laugh is like if you look at like EV cars, because I just saw Meet Kevin is back in Tesla for like the 25th time, because he's like his thesis is like Tesla has no competition because Rivian's all that's left and this is like their last lifeline to survive. I'm like, there's fucking companies that make EVs other than like he just keeps thinking about it in dedicated EV land. Like he just writes off other car manufacturers. Like you can look at EV sales. There's some companies with sizable EV fleets already. BMW is a big player in this space now, in the US. Chrysler has some interesting, like the Jeeps, the EV Jeeps, and the Ram that they're going to come out with soon. Well, that's Stellantis, but I mean, there's a distribution of EVs across some of these companies. Toyota, almost 8% share. I don't know why they always the Tesla people always think of it just like as Tesla versus only dedicated EV companies like it. It's like you've got Toyota, you've got Volkswagen, there's BMW, there's
What's
other
Chevy
players.
doing? Chevy's pretty big on EVs, right?
Yeah. So they discount. I mean, like, oh well, theirs suck. It's like, but not everyone cares about high tech cars. I don't know why they can't get through with people's heads.
That's part of the value prop of Honda.
Toyota, okay, like Toyota's barely even taking EVs seriously at this point because they know they have runway. They know it's going to take years and years. It's not going to take more than 2030. So they're taking their time. They're not totally dedicating to it, and I don't know. I don't see what everyone's so excited about with Tesla. Like nothing's changed, other than he got paid. So, he might not
get paid. He got
Yeah,
that money.
because the court case is still relevant to this pay package. So, and you have less governance in Texas. So have fun with that, people. But yeah, I would just I don't know if I would buy this unless they can prove. I mean, but then if they prove they're profitable, the stock could double. If they can prove their proof of concept. So, anyways.
Yeah, it's interesting to me. Like the Volkswagen Rivian deal is kind of interesting to me because like Volkswagen is not behind in the EV race. Like Volkswagen actually has some really, really good EV offerings.
Mhm.
So it makes me like, it definitely makes me skeptical of like what's Volkswagen getting out of this. It might be specific like patents or IP or I don't know, resources that they want to use that they will
Rivian
get
does
access
have
to.
fleet software, which is kind of intriguing. Like
Yeah.
fleet to run an EV fleet of like the vans, although it's kind of not been that impressive. But
Yeah, I mean the Amazon delivery vans are Rivian, right?
yeah, they don't have to be Amazon. They can sell them outside Amazon now.
Oh,
People
that's
keep thinking that they've seen them for the post office. I keep seeing Reddits where they're like, look, that's a Rivian for the post office, and it's just an unmarked white van. And we're all like, how do you know that? And why is a post office van just parked in a random parking lot? They don't do that. They deliver mail and then they leave. Like, no. Yeah, the post office EV thing is a disaster. I should do a whole video. I got to do a little more research, but that whole government fiasco should be a whole video. Like going from the workhorse thinking they were going to get it to out of the nowhere Oshkosh gets it. They didn't even have a vehicle. Like Oshkosh doesn't make little EV carts like the post office ones. So they had to just like do it on the fly almost. It's been such a shit show, that whole process. Wait, Dan is salty about Tesla because he bet the farm on Lucid. Okay. Do I have to say this all the time? I keep saying this. People, okay, Lucid is not a real company. It's not a real company, okay? It is a vanity project of the Saudi royal family. So if you buy it, it's not a real company. There. I don't care if they have filings and shares. It's not a real freaking. It's not. Lucid does not exist to make money. Like it's not why it was created. So.
Oh no, Andrew.
Oh my god.
Oh
Yeah,
no.
yeah, Andrew's been digging away.
Andrew's
feel
gone to the
bad.
dark side.
He
feel
has,
bad.
truly.
He really has. He's just like, I don't care about going along anything anymore.
I try and be a good boy, talk about air conditioning companies in between destroying America, and he's just the dark side at this point. It's all Jover. Yeah, electric golf carts. That's what that'll save the world. Electric golf carts.
You know it.
Just like Ross Gerber's Arcimoto, 3-wheeled beach carts. That's what we want.
The FUV. Fun utility vehicle.
No, not the coverall company. Oshkosh is a truck manufacturer for the government. Do people not know this? Is that not something known?
I'm
I'm from the Army, so I just all our trucks are Oshkosh. Yeah, they're right there. See, the two of them. Like so Oshkosh makes like diesel electric trucks. That's what they're really good at it. So as you can see, they don't make little cars for the post office. That's not what they specialize in. They're a heavy equipment manufacturer. They're getting in electric vehicles. Yeah. I just don't know how you use lithium batteries for something this big. It's just the weight of it. I don't get it. And to me, overheating issues with that much battery, the temperature. I mean, you can find those videos online of like the electrified buses and stuff bursting into flames. Oh, here it is. There it is.
Get to school, kids.
Look at it. It's so cute. Look at it.
So that profile just confuses me.
So weird.
You love it. You love it. You love it. I mean,
Something tells van life. There we go. That's the other market for Oshkosh.
so like they have to deliver mail for 8 to 10 hours a day, let's say. Like, so how long is the battery juice going to last in this thing? So is everybody on their route going to have to go back and get a different vehicle? So now do you need double the amount of vehicles, or are you swapping batteries? Like, I don't
They
understand
would probably
the
do
logistics of
fine.
how this is going to work for the post office.
They would probably do fine because, like, I would think that post office delivery vehicles aren't doing that long of a trek. It's more of just like constant slow speeds and stops.
Yeah.
So as long as it's under like, 100 miles total, they're probably going to be more than fine.
I mean, in some area, like it depends. Like I think these make a lot of sense. Certain types of like situations, like cities.
Yeah,
But
cities and even suburbs, right?
like
But-
rural, like this is going to be it for everything, though. Like there's not a rural solution. It's just going to be these things, supposedly. So we'll see. Sensors and air conditioning. That was just they just threw that in there.
Air conditioning.
The UPS union had to fight to the death for freaking air conditioners. So after a few UPS workers like dropped dead in Arizona.
Oof.
So,
Yeah.
That's
yeah,
so bad.
Yeah, can you imagine those in Arizona, the delivery trucks, no air.
Yeah.
They got like a little fan in the past. But that's right. Everyone hates unions, right? All they do is steal your money, apparently. It's a bunch of yokels say. All right. Any fun comments?
Only comment I'll add is have you ever like nodded off while in a vehicle that was like blazing hot? I've done that before in the past.
I'm listening to
proud of
Strongman's
While
advice
driving.
While needing to drive, yes.
Oh, that's right. Strongman has a second channel.
Yeah, he's
the
blue pill
red pill
cheeks,
thing?
or red pill cheeks or something like that.
Blue channel. Yeah, he's going through some tough times. So
Oh my gosh.
I'm almost married.
I don't
20
know if
years,
that's
so
advice
I
I would
don't know
take.
what to say. I've been married since I was like 23. So
Dude, me too.
I know.
I'm just a younger version of you, Dan.
It's funny. Yeah, I just roll. The years roll by. Like everyone in my family is like, when you go to like a wedding, they ever do like, all right, get off the dance floor if you've been married like less than 5 or 10 years or whatever, some stupid game. Like they have to get up to like 50 years in my family. Some of the couples, like very long married family. Like
Nice.
20 years is pretty typical.
And then there's the one couple that was like, oh, married to each other? No, sorry, my bad. Multiple marriages, different people, different time frames, but combined cumulative experience.
If you come into my family and like 2 years relationship with no ring on the finger, we're gonna start looking at you. We'll be like, what are you doing here? You wasting my fucking time. My sisters, get the hell out of here, you dick. No, I'm more catty than that. It's all right.
You're more catty.
I've learned something with little girls. I thought girls were like catty and manipulative.
Mhm.
No, they're violent. Like they've come home with like getting punched like in elementary school. I'm assuming the cattiness comes in like later, maybe high school. But little girls in elementary school, they're throwing fists, right? Like pushing each other into bookshelves and stuff. So good times.
Messed up world we live in.
Girl dad. Wait, who we got? When will race? Oh, that was interesting. I did see that. Ferrari talked about an EV car for the first time.
I'm gonna drop here soon.
All good. Thanks for being on, Jesse.
Yep. Bye.
Bye, Jesse.
Yeah, they just talked about this.
Craziness.
That's the one thing. Like, this isn't the one, is it?
I mean, these guys can get away with it, though.
I mean, they don't have to make an EV. You could still
They
make
don't have
gas
to.
cars. There's plenty of parts of the world that want Ferraris that don't want an electric vehicle.
Mhm.
But they'll be fine. Man,
Yeah.
this is the one I would have loved to buy like back in 2020. It's such a beautiful business. They just make what they feel like making, and they don't give a shit, right? They just make a certain amount of cars, and they sell every single one of them, and they don't care. And you have nothing. You pay what they ask you.
I,
Such an amazing business.
I don't even know how to buy a Ferrari. I don't even know what the wait list would be for a Ferrari.
I just couldn't imagine, because like I live in the Northeast. It's like potholes. You ain't
Yeah.
driving a car with that much.
Oh yeah.
You're,
Yeah, I
wouldn't-
can't
wouldn't
afford a
drive it.
Ferrari either.
No,
Honestly.
unless I could raise it when I drive. Well, then what's the point of a Ferrari if you're gonna have it like off the ground, like a Baja edition Ferrari? What are you, a monster? But yeah,
Sunday.
I mean, they'll eventually have one, but oh wait, they actually are they producing it? Interesting. Wonder if this is like a demo, short one. Friggin' Mercedes, man, those are sick. Like if you gave me like $100 grand,
Mm.
freaking Cybertruck, get out of here. I would get
Oh
like
no,
freaking
hell no.
the Mercedes EVs are like sick. Yeah, which one was I looking at? They have like, oh, they're freaking cool. Like that. Look at that. I think that's really neat. Maybe they could stop with the stroke inducing video. Oh my God. Stop with that. What are you doing? I don't know. I'd probably go with, if I was going to drop 6 figures on an EV. What we got here? Okay, not that one. No. Where's the sedans? Yeah, that's not bad. Okay. No. Oh, yeah. Come to daddy. Dude, right? Oh, that would be fucking sick. Someday. When I retire, talk my wife into it. Or a Porsche, I don't know. Only need one car, though, retired. So. Ross Gerber absolutely cried about you. Dude, I would love, I friggin' would love to fight him. Like about, when I've heard Ross Gerber talk about unions. He thinks they're like criminals, basically. You know, heaven forbid you should have someone on your side, you know, fighting for your rights as a worker. Oh my God. So bad. But, comments. I'm going to start taking blue pills soon. I don't get do you know what red pill, blue pill means?
It's sort of like an Andrew Tate manosphere thing that like.
Is it a reference to the women or the men?
No, I think it's more of a Matrix reference or a crude.
Well, I know the Matrix reference. That's where it comes from, right? Yeah, I know that part.
Mhm.
Yeah, that sucks. You can't have a manual on EV. You can have like those paddle shifters, but it's all fake.
Yeah.
It's all fake anyways.
Yep.
Like it's not real. It's not real shifting. You can't buy manual Ferraris?
Apparently not, I guess.
There is a so Porsche brought back manuals because customers were demanding it. I've actually driven one. It was a lot of fun. I think this is what I'm thinking. I think it's this one. I think it's the Sport Classic. That looks like it. Yeah, so they brought it back. It was like only supposed to be temporary, but because customers were demanding it and it sold so well, they've like kept it. Friggin', it's a sick looking car. Like, look at that.
No, yeah.
I mean, man, that's my jam right there. It's the American dream. That's why we short companies. So we can buy German engineered works of art. We're true patriots. So, oh no.
Well, I mean, it got here almost certainly legally, so you know, proper tax and paperwork was done.
Goodbye, man. I'm pretty close. I really want Monster in the mid 40s or low 40s.
Yes. Yeah, it just refuses.
It's not because it's not a new position for me. I'm pretty solid on it, but I mean, I've had Pepsi for a long time. So if I'm going to swap it, I need that cushion for the pushing. There you go. So, Dan, why won't my SoFi stock go up? Okay, this This
He's
crawl
trolling.
guy knows a lot about me.
Yeah, he's drawing around.
Interesting.
I want to say he's they are from Cashflow Kings, Ryan Dingler and
Oh, is he?
That's what I want to say, but don't quote me on that.
I assume just most people that ask me stuff are trying to mess with me nowadays. I've been around long enough. I don't trust any of you monsters. Last manual Ferrari released was 2012. See, like, manuals are fun, like, occasional. That's why it made sense for sports cars. Like, every day, it's kind of sucks the life out of you if you get stuck in traffic every day driving to work. So, yeah, dude, if I got a Porsche though, like I'd get a Cayman like Fabio's. I'm probably not going to get the one with he's got like the crazy sporty model. I'm not going to get that. There's a limit to what I'll spend on a car. By the time you can afford a Ferrari, your leg can't take a manual. Yeah, sorry. That's like, I can't imagine spending more than maybe 80,000 on a car. I don't care if I have $1 million or whatever. It's just like it's just a shitty. It doesn't make sense.
No.
So I am messing. I just know your favorite stocks. Oh yeah, apparently. So housing slump. Okay.
Yep, housing.
Shit, we're an hour in, man. So much talking.
Well, we had fun. We front loaded the fun.
I just noticed that so all the housing stocks that we track, I like to follow housing. I think it's very interesting. So if people are wondering why a lot of house stocks got crunched the last month or so, I mean, I could probably run through all the ones I'm following and they're all last month has been miserable. Just housing sales suck. People are, and then, there was a slight increase in rates recently, and people are, I mean, it's the most important interest rate of your life. Like, to have a 3% or a 7%, that's huge difference. You could be $1,000 more a month in interest between those two. And if you live, and you only get $10,000, the SALT deduction, so you don't even get the full benefit of a high more interest rate. That affects it too, I think. So at some point they're going to lower rates, right? And you would think it's just wild. Like, the Canadians did it, the Europeans did it, and Jay Powell's like, I don't care. he's still holding to that 2% inflection point on inflation, which is just, I think, is nuts. The pressure, I mean, if Trump comes in, dude, rates are going, oh my God. Like, I'll tell you right now, like, if Trump comes in, if he does win and SoFi is still $5-6 a share, I might load the boat. He's going to fire Jay Powell so fast. Don't tell me he can't. And then he's going to bring in his dude, and they're just going to start dropping rates like crazy. They're going to cut taxes again. He doesn't care. He's just going to rip it all up. So, but yeah, a lot of housing stocks that we watch got clobbered recently. Everyone was like, this was going to be the year all the rate cuts, right? We went from 4 to 1, and now we're like maybe none this whole year, which is kind of wild. So they're all clapped. My cabinet company, I'm still up on it, just very barely now. So, but they did an acquisition.
Do you
and
like
they
it?
used a convertible debt note to do it. Not my favorite way to finance stuff, but so be it. So, I might buy more. I did buy a little more in 15. So, but Builders First is still interesting. And they're more directly attached to new home construction than this one would be. This one also is remodeling, but yeah, I mean, I just think people will forget, like, if this year is expected no rate adjustments, housing's numbers suck, like, this is when you load the boat on these stocks, hopefully, to do better next year. Other than buying really expensive tech. So there's an alternative to buying really expensive tech companies. Anyways.
Part of me
Not too much
likes
about it.
your idea more than Builder, though, and I can't shake it. I'm probably
Owens
wrong.
Corning.
Between Owens Corning and Master Brand.
This
Like,
is interesting. I like Master Brands more than Owens Corning.
Yeah.
I don't hate it though. Someone asked like a week or two ago. So, yeah. Problem is you have like there's more than just housing materials with Owens Corning. You also have green energy construction. So, I don't know. I like more pure plays.
Hmm.
I had this at $70 a share. Sold it at 100. I thought I did well. Well, I mean, timeline wise, it was
you did well, but
so.
there was-
Jesus, it was a long time ago. It was very. Yeah, it was like back here. I think it was. Or no, when it slumped. Yeah. Okay. It was summer of 22. I bought it like around here, 70, 80.
Mhm.
And then I sold it when it ripped up here. Yeah, we can do.
Yeah.
I
Yeah,
never
it's
had
just-
long term on it.
it's just money left on the table. That's
I mean,
all.
it was dirt cheap when I saw it at 70. The P, like, I'm like, my God, they just have to exist for this to be a good investment. Like the valuation it was trading at when it was $70. I was like, okay, they don't even need growth. Like the growth I projected was like +2 or like GDP plus or something like that. Like Cigna, same idea. But you can model those. I call it GDP plus if you're like saying 2 to 4%. Like you can still model. Actually, modeling works really well for stuff like that. Actually,
yeah, I'd agree.
it's actually more accurate. So, anyways, but Paul's like, no, my model works on everything. It's like, no, your model works on like Coca-Cola and Home Depot. Probably it doesn't work on freaking AMD and NVIDIA. Fucking midget. I saw a picture of Paul. He's way shorter looking than we even thought. Someone had it in the like him next to some other person, and he went up to like, dude, he's got to be like 5'4".
If
Like,
that, yeah.
he looks really short. I don't know. I'm not gonna pull it up, but so. Oh, that was probably one of the last. Oh shit, I got more topics, but I caught this because I follow self-made was it Kelly? I think her name's Kelly. If it'll pull up, here we go.
I like that this is full metal, or full self-referencing because it's also streaming on Twitter.
This was so interesting because
Yeah.
it is, it's good to see someone say this. I regret buying PayPal. Boom. Like there it is. And this is the part like there's investment decisions that wreck your finances, like you lose a lot of money, like buying Conn, but then there's also investments that destroy your time, waste your time. This is an investment that just wastes your time. Like there's nothing interesting. Nobody's ever elaborated on why it's a good investment other than to say it's cheap. That's all I ever get from these people. It's cheap. Okay, cool. That'll get you really far in life. You value investing, people. I'm sure you all suck at investing. I'm like declaring war on you. I think you all suck. Anybody that says they're a value investor, I can't stand it. Like, what does that even mean? And they're like, whoa. And then there's always the guys like, we're all value investors. It's like, I'm just an investor. All right. Like, Jesus Christ. So like nobody's elaborated, like, and I've shown deteriorating business, increasing competition, margins are they can't charge what they used to charge. There's no exciting expansion plans, but they don't have a huge pile of cash like Apple. They're buying some shares back, but they're, the growth of the business is what matters. The growth of their core business sucks. And it's because it's based on desktops. Like PayPal is a desktop app for the most part. They don't own cell phones. I don't understand why you would buy PayPal other than you tell me that it's cheap. That's the only reason you buy it. And it's such an unconvincing thesis in this day and age. I don't know. I don't understand. I don't know. It just depresses me. Like, I think people get to this point there's no like they have no risk. They have no risk taking ability. I always think like how does value investing attract people? And it's like, I think you've got like the nerds, you got the math nerds who really have to quantify things in life. So they have to build these really elaborate DCF, discounted cash models, right? So value investing, building models and relying on models leads you to being a value investor. I get that part. And then I think you also have the people that then they have no ability to handle risk or take risk. So they need to be assured of their investments, which means they need the assurity of Paul's stupid software telling you the numbers are green, or it being like a single digit PE ratio. You think there's no risk because it's so cheap, it can't possibly go cheaper. Like there's people like that. And I just think none of these things produce alpha over the market. I really don't think. I think this style of investing just sucks. I don't see why you wouldn't just buy the market. You're not taking risks. Like that's where the money's made. Oh, it's killing me. So I don't know. I'm sure I'm going to get hate, and they all tell me that they're not the typical value investor or they've crushed the markets. And it's like, whatever. There are good value investment. I guess you could say like when Meta was 80, would you even call that a value investment? Maybe I would say
Maybe
that would be a fair assessment of that one.
But
over and large, I always see these value investors' portfolios, and it's always like the dog shit companies. It's Intel, Walgreen Boots Alliance. It's 3M if they still bag hold it. It's like Starbucks after it dropped 30%, right? It's just like this. I don't get this style of investing, and I give her props for someone actually admitted it's really hard to admit something you bought sucks and you made a mistake. I always joke with the SoFi people. I'm like, you're going to bend the knee someday and admit it was wrong. Someday you'll admit it, or you'll just delete your channel and move on with your life. But it's okay to admit you were wrong. I was wrong on BarkBox. There, I could say, like, oh my God. But I don't know. And they won't give up yet because they haven't gotten hurt. But then they don't realize you have gotten hurt because you've wasted your time. You've wasted your time. You haven't financially had a hit yet because you probably say you did buy it in the high 50s, low 60s. Fine. You haven't really gotten your cheeks clapped. Fair enough. But you want to tell me it's a growth? They want to say it's a growth investment because it doesn't pay dividends. Okay, fine. I mean, I can just compare it to a growth low cost index. And I'm like, you ain't getting this back. I mean, you're not getting any of this back. It's Jover. You've gotten wrecked by time and return. So, oh, look at
what?
The man in black.
Gentlemen,
Fabio.
how is everyone?
Did you see Mr. Portman's short?
Wait, is that okay? Was that actually Mr. Portman on Twitter?
Yes. That's
He
what it was.
referenced your post. He found it.
Should I invite him on?
Dude, you should. It'd be funny. It'd be so funny.
I'll be like, bro, you became a celebrity. But anyways,
You're our hero.
you're thank you for your service, good sir. We honor your sacrifice.
It was a joke because we're like, it's rare you actually see who you're exactly extracting wealth from. It's usually just Mr. Market. Like, no, it was literally this guy on YouTube that you were taking his money. But
You're turning this into a much more intimate affair than it usually is.
It's very true.
not real.
Especially since
Yes,
like
it got real.
he proudly showed like so many of his aftermarket hours, and like you can take a look at the flows of aftermarket activity, and it's like, oh, it's you, it's just you.
Mm-hmm.
Did you wait? So he posted a short.
Yeah.
Mm-hmm.
Was it about? Was
referencing
it
a
about
tweet?
He said he's diamond handing it.
Yes, yeah, he did say
Oh.
that too.
Okay. So that means the project We'll name the project, but whatever that project name is, it's working. Project transfer is working. Anyways, you guys were talking about PayPal, right?
Yeah.
Yep. I just thought because that Kelly woman on Twitter said she regretted buying it, which I thought was an interesting inflection point.
Yeah, well, I've been having conversations with some other PayPal bulls, and they haven't admitted regret yet, but you know they're changing some of their tune. They used to be like pounding on the table, "You're a moron if you don't see the value," and now they're more like, "Okay, well, you know, it's cheap." Like you said, I was listening to you before I got on here. That's exactly the case. A lot of them just say it's cheap. I was questioning one of them today, and they wouldn't answer this question. So the question I had was, is the category growing? And if yes, which I couldn't get an answer out of that, but eventually I did, that it was yes. Is PayPal growing at the same rate, at a higher rate, or at a lower rate than the category? If you guys had to guess, what do you guys think it is?
Maybe at the same rate.
At best, same rate. I lean towards lower.
At best or lower? Yes. If
No.
you say at best or lower, that's the most accurate answer. It's not a precise answer, but it's the most accurate answer. And then if you say above the rate, that is the least accurate answer.
So then they would have to hope for a huge increase in just the addressable market of a kind of mature sector, like plenty of people in this space.
Because I go for convenience. You stated a point that I've never stated, and I thought it was brilliant, about the PayPal desktop, like the desktop application for it. And then on your phone, I realized, when I'm interacting with a lot of businesses and services, and if it's an online purchase and I'm on my phone already, a lot of times it will prompt the Apple Pay option. And I'm like, yeah, sure, Apple Pay.
Mhm.
That's actually the one I go to the most. If there is an option when I'm on a website and I'm using my phone and it's like, all right, I need to check out, I'll use any of the credit cards that I have, on my Apple Pay, and I'll just click Apple Pay and do the Face ID and boom, done. Because I don't care. I'm the consumer. I don't care. I just want convenience. That's all I want.
I want to buy something and I get to the end and it's like whatever button's there to pay. I don't care. Like there's no preference by my part. So
yeah, it's silliness.
I mean, to me, like I don't know. I would rebrand the company, call it Venmo. Do what Zuckerberg did. Like I would get rid of PayPal. I would just call the whole thing Venmo. Just say they're a new company, a new day or something. Maybe they could spin off the desktop.
I'm gonna go through a dead zone here, so if I freeze, that's why I didn't die.
But this killed them this week. I mean, this had to rip the heart out of these PayPal people because it was kind of on a little bit of an uptrend into the high 60s, and then all of a sudden Apple's like, "Oh yeah, we're gonna have a firm come in and do buy now pay later with us." And it was like, I think that tore the guts out of some of these PayPal people. So.
Yeah, it's they'll the market realized that there's no distinction between these products.
Do you think Apple did this because of their lawsuits about being a monopoly, and the Eurozone I think still suing them, right? You think that's why they got rid of the Apple Pay version of this for a firm?
Well, I think they were always using someone else. They were never taking on the risk, but they got rid of the branding, I think. Or is it? Well, I don't know. Is it branded as a firm, or is it branded still as Apple?
I don't know.
Yeah, because I've never used that feature myself.
You may be right. I think they might have gotten rid of the branding on it for the buy now pay later.
Yeah, because they never took on the risk. They were never, saying, "Oh yeah, we're on the hook if you don't pay."
At least a firm has upside potential rather than SoFi. Like, at least this could double, like on news like this. But
SoFi, don't get me started. But Oh man, that's why I told the Kelly woman, but she probably won't see my tweet, or she saw it. She's not gonna respond to it. But I said, like, at least it wasn't SoFi. You could have done worse. Like, there's opportunity cost and there's capital destruction. So you could have been like the Canadian dork.
Mhm.
Okay, it turns out Apple did have a pay later choice under Apple Financing LLC, a subsidiary. So it could be what you pointed out, Dan, that they
Oh, okay.
yeah, or at least tried to point to regulators saying, "Hey, we're not as, you know, monopolistic as you're accusing."
Maybe.
Maybe.
There's like, you know, this, you buy the dip. Like, how many years you got to buy the dip? Jesus Christ. The pain never ends. Oh,
Eventually, it's gonna work out, Dan. You just need to be patient. Eventually, it'll work out, and they'll outperform the market in 1 year, but not tell you about all the other years before. That if you get the cumulative return up until that point, it's probably dog shit.
let's check out the old SCHG comparison. 5 year, nope. 3 year, no. Hosed. 1 year, no. Is there any time frame that PayPal beat it? Nope. Nope. There's no
Dan.
time.
He's already
There's
dead.
no time frame this beats SCHG.
He's already dead, Dan. Stop it.
Like, what more? If you can't beat SCHG, you're not are you really a growth investment?
He's already dead. Please. Does PayPal pay a dividend?
Nope.
No, it's definitely trash.
Oh man. SoFi. Oh well. Someone asked, they're like, why do you keep talking about SoFi during live streams? Like, why are you blaming us? There's whole channels devoted to SoFi. How dare we talk about it?
I was asked that question, and my response to that person was, listen, you need to understand, because they're probably a SoFi bull. But a lot of times they just don't want you to talk badly about it. So they're like, why do you keep talking bad about SoFi? Well, I say it is the perfect example of our current time period of a business that is hyperly obsessed over by retail and is complete dog shit. It's the perfect example.
Excuse me, Gil. Calling it trash. Excuse me, Gil. Wait, you want me to put BlackBerry up here, Gil? I'll do it.
Uh-oh. All right.
We'll put
I'm gonna
It's
go,
BlackBerry.
literally it's quite literally the meme of
How
neckbeard
much
guy
longer you guys
with
gonna be on
line.
Gil,
here?
how's
It's a little
BlackBerry
bit of green.
doing my trash cybersecurity ETF? It's not looking good, buddy. It's not looking good.
How long are you guys going to be on here? Because if you guys are going to stay on longer, I'm going to go up to my computer.
I wouldn't be shocked if we got another half hour ish. Not to speak for you, Dan, but I wouldn't be shocked.
Oof. I got one more topic, but
Oh, did we hit SCHD and mid-year review?
I can just do a CHD. But
Okay, either or.
I actually didn't prepare. I was going to make a spreadsheet mid-year review, but I got busy.
Yeah.
Okay. I was just going to talk about so SCHD. Let me go to Stan. I got to have him on my channel sometime.
That'd be cool.
SCHD Stan. So he posted. So they had like the biggest gain ever on their dividend. So yeah, it went from 60 cents per quarter and then it got declared 82 cents. So huge, massive increase in the dividend. So pretty interesting news because a lot of people had this is a very divisive ETF, SCHD. I sold it, so it just didn't fit in my factor investing. But it's just so fun. Like, I know a lot of people don't like it, but like it's again like a mentality to me. And we hear like, okay, yeah, the stock price goes down to reflect the payment. Got it. It's an accounting adjustment.
Mhm.
But to me, it's like a mindset. And I would have called myself, I still kind of call myself a dividend investor. A little different, but to me, it's like whatever gets you to the finish line. Like if you need those dividend payments and to see those increases, if that's what really fuels you and keeps you buying through good and bad times, because like SCHD vastly underperformed last year because tech ran. I mean, but then it did well in 2022. So if you stay committed, I guess that's what I would tell people. Like, if this is your mode to get you to retirement, I think you're going to do just fine. If you flip flop from SCHD to QQQ and then you try and time the different macro events in the economy, I think you're going to fail. You stick to some. This is a solidly constructed, and I have a review of it for anyone who gives a shit, but it's a solidly constructed, low cost, not diversified, kind of semi-diversified. It's only 100 stocks, but ETF. I think it has a place in people's portfolios. Like, I don't think this should be your entire portfolio. Like, he's not all SCHD. He's also got SPY, I think he says. So but people get so bent out of shape. But oh, he's through the tunnel.
Yep. Welcome back, Fabio.
No, I'm speaking on this.
Oh, go ahead. You're back.
Yeah, no. Who are we talking about? Who's the guy?
His name. He calls himself SCHD Stan because he's like, his whole portfolio is SCHD.
His whole portfolio is SCHD.
Mm-hmm.
Large chunk of it for sure.
Yeah, I think then his retirement account is like SPY basically, but this is the other piece. I'm pretty sure.
Oh, okay. Well, I was having this conversation with Ryan. I don't know if you saw the convo or the bread and butter of it. I don't know if you wanted to talk about that from the perspective of a young man, because he's 18. Yeah.
So, it's tough. Like, I got into dividends because I got wrecked by .com. So it was the only thing that would, because I was kind of depressed losing half of my freaking money. But it's just tough to say. Oh, he's back.
Hey, with bricks.
It's tough. Like, if you have a 40-year horizon, I don't know if I would tell you to do SCHD, but they're not real. We know it.
How do you know? How would you know?
Punch it.
Punch it. Punch it, Chewy.
Jump into the wall. Oh, bullshit.
It is a
You
wall.
just got a hard. It's a green screen. With
No,
wood.
it's not. Well, the wall's painted. I painted the
Painted
wall.
brick.
So no, it's painted to be a green screen.
Oh.
Yeah. So
Oh,
it's like-
okay.
It's an
3D
actual
chess
wall.
move.
It's not a green screen. You see, it doesn't move.
Yeah.
But like you see, I have a vent here that keeps me cool. I put it placed right there because I get very warm, especially with the computer and the lights. So I got the vents that are right here, positioned right there, so I'm kept cool.
Oh, interesting.
Is he actually 1% so far? There's no way. That guy's messing around.
Yeah, joking around. Gotta.
I don't like. The most important thing with an investment is stick to it. So I guess like, if that fuels
die.
Ryan to be SCHD, because you'll see, the dividends should increase more than the S&P 500, and it should do fine. But you're never going to outperform S&P 500 over long periods of time with that type of strategy. But you're not going to lose, 40% on something like Conn. So
I don't even know how to respond to this man. I feel like I'm so sorry, or should I say thank you? Like, how do I address this? Do I thank him? Do I apologize?
I know if you bring him on after, if it goes BK and then you have him come on, he's just crying. he's trying to hold it together, and he's
Yeah, exactly.
My grandparents gave me that money.
Well, he turned it at one point into 150,000. It's just all had to end up in someone else's pocket at the end of the day. It was destiny. Yeah, no, but I didn't take most of it from him. He gave it to other people, and we're being obviously that's not actually how the mechanism of this works. He's just burning money, but
it's just funny to me. You're shorting a company, and then you just find someone online that just dumped a shitload of money into it and is positive, and you're like, "What are you doing?" But
Yeah, that's just the part that just kicks me is like we were all, gathered round going like some idiot just bought it after hours. A market order just came in. Look at this. And then we're all like, what kind of idiot bought this thing after hours with no volume? And then the guy goes like, we go on YouTube. I don't know who found it, but someone found it on YouTube, and it's like, guys, I went on Conn's. I think it's a great opportunity. And he's like showing after hours buy, and it's the exact amount that we saw. And I'm like, what the hell? We found the guy. That will never happen again. This is a one-time thing. That Conn's is like a one-time thing in so many ways. It is a rarity.
Mm-hmm.
We just have to just take it all and embrace it. So
I have faith, Fabio, that 5, maybe 10, within 10 years, there'll be another setup.
there'll be another setup.
There'll be another
I
setup.
thought I was done after Perry, and then out this comes. So I've put my tax money aside. I'm just kind of rolling up some of my smaller spec plays this year. I don't know.
Is Gil in the chat?
Yeah, he's in.
Gil, if you saw my options portfolio, I think I would break your mind. Just wanted to tell you that.
You'd be like, box spread, what the hell is this?
I would think your mind would break. If you get an anger vein from the other times that you got upset about the options, your veins, they'd just be like all over your forehead. You're like, how dare this?
Did you know there's box spread ETFs now?
Yes,
box.
BOXX.
Yeah.
Yep. Good ETF.
The gig's up.
I like it. I love it actually. Merrill doesn't let me buy it though. But you can probably yeah. It has to meet a certain time threshold before they allow their investors to buy it. Because otherwise I would legit have so much of the cash that I have just like sitting in that. There'd be no need to have a CD.
You're able to do it yourself though, and it's fine.
So what did you tell Ryan about SCHD? What did you tell him?
That a man of his age that is definitely shouldn't be worried about volatility, because when he said to me, it's like, oh, it's lower risk. And I'm like, dude, you're 18. It's like what are you worried about risk? I know how you're defining risk. You're defining risk as volatility, that it goes up and down. If you're worried about permanent capital loss, I mean, like we're talking about ETFs that follow various index strategies. If you're looking at SCHD, what comes to mind is like what you're trying to say is you want something with a little bit lower volatility, and that's fair if you're an older person. But even then, by the way, it's like doesn't do that good a job at suppressing volatility. It's still like 100% equity. So let's be clear, that's like within the realm of aggression. It's if Jake's probably not on here, but it's what is it? It's aggressively safe.
Yeah.
It's aggressive.
I'm changing my channel name. I'm going to be aggressively safe investing.
There's a reference right there for the viewers to look into.
Aggressively safe mindset.
Aggressively safe. Yeah.
Good God.
I mean, like if you have 40 years of time, let's say, because he's 18, like this, like if you actually look at the research, this would be a way to take the risk, an appropriate amount of risk for like the return you'd get. This life cycle investing, which I did a video and I actually linked some of the papers attached to it for people. You'd have to understand, I talk about in this video, but like this is the one where you do like the leveraged funds. So you put the same amount of money into the market every year of your life. Like you take the expectation of what you need to retire, and then you say, okay, this I divide it by how many years I work. And then at the beginning, you don't have enough money, but you use leveraged like SPY products to catch you up. And then eventually you just transition to buying it outright. But historically, like the research they showed on this, the longer you do this, the better the results, which was interesting. So this is something like someone with 40 years and some knowledge of investing. I kind of said it in this, like, this is something that you could actually get a great return on. To me, this, in my opinion, this could be something. But
leveraged long term, the 2x, right?
Yeah, they did 2x in the studies. I think they did that because they looked at what's the worst returns of the market. You would survive it with a 2x, whereas a 3x you might not survive like a big like crash in the market potentially.
So, like a TQQQ.
Yeah. Which, yeah, if you think about it, like if you had a 25% correction or 30%, yeah, 2x, you'd survive a 2x correction with leverage. But 3, you're crying to mama because you bought Conn. So, yeah, it's tough. I don't like. I don't know. I'm not just the person to say go buy SPY. I mean, I have different options in each strategy. Fabio doesn't even buy indexes.
Yeah, well, you know,
you're really failing in life not buying in indexes.
I feel like
it's not working. Oh,
I don't want to jinx it, but so far, yeah, so far. Which tomorrow I'll do the whole like update. I'll put it on Twitter. I just get lazy of posting it twice, but I'll just post it on YouTube, a link to the tweet.
Do you think though, like when you get closer like me, you'll start taking some like meat off the table or risk off the table?
I can't say that I wouldn't. When I get there, yeah, definitely
I guess it'll depend on if you have like a year that you get wrecked or something. Like
it,
change your mind, right? Maybe I don't know.
I don't know if I'll get wrecked because like even right now, right? You see like the percentage I have of cash, someone my age probably would never even have that. Because right now I'm like 15% cash. And actually that's actually the same percentage I have in both personal and holding co. So I mean,
so that is a way. Instead of index products, you are taking risk off the table through just short-term security or cash. Yeah.
And like the one part that I'm trying to as a challenge is try to eke out as much performance as I actually can from the fixed income instruments. I actually want to see how good I can manage that because like, getting or focusing now, I spend a little bit of time, let's call it every other day now, trying to hunt for preferred share opportunities or baby bonds. It's a lot of crap, but I've seen it in the past work that if selected correctly, you could actually get really good returns. Let's throw away the BS risk-adjusted returns. No, like absolute returns from those products. So right now, there's not much of a spread between in credit. So if you take on a little bit more risk from the credit standpoint, you're not going to get actually that much more yield. They're pretty tight right now, which is bullish for the economy. But I'm going to be a little bit like patient when it comes to that. And honestly, the risk-free rates that you're getting on the short end are not bad. Like you get on my CDs, I'm getting like 5.4 annualized, 5.5. So it's not bad. And then the preferreds, I have some preferreds that are, I'm trying to be also tax efficient. So the members, obviously, when you're following it, you can see how I'm trying to navigate that. Really thinking about taxes, trying to, again, also maximize yield, but minimize permanent capital loss too. So there's like one preferred right that has a qualified dividend and it has an adjustment coming up in September of next year. And we're going to see how that actually transpires because I expect it to be called away from me because there's no way Brookfield's going to pay 11 or almost 12% interest rate. Yeah, they're just going to buy it back.
Would you buy it at the preferred?
I bought it just over $25, like just over $25.
Oh, okay.
So the return rate's going to be the yield, and that's pretty much it. And then I'll take actually a small, like a couple pennies loss on the principal when it gets paid back. If they pay it back, they might not, but very unlikely that they let it go through that re-rating. So.
You notice the preferred share ETFs are terrible, like performance.
Mm-hmm.
I almost feel like if you're going to do preferred, just I think you'd be better just picking the companies.
Yeah,
'Cause
no,
all the preferred
100%.
ETFs are dog shit from what I've
Mhm.
seen.
Yep. Because they're kind of just systematically reinvesting, and then so if you got to be very careful because with fixed income, reinvestment risk is a big problem. And at the very least, like when you're dealing with like your own selection, it may be that strategies that you were focusing on before, so like going for lower risk profile, higher credit rating entities, well, maybe let's say the credit spreads do widen, and then you maybe want to take up a little bit higher risk. There's, for example, right now, some that I'm eyeing. It's a shame where they're at, but like if I was doing this with my cash a year ago, would have been really interesting. So like the private prison companies, because I was fairly confident on the equity, but I was buying other things. And then if I had, was doing this with my cash instead of just doing high yield savings, because I wasn't really focused on this, I would have probably, explored buying at least like CXWs, because I was always saying in the weekly calls like 2 years ago, CXW's leverage is way less than GEOs. I have no issues with theirs. GEO is the one that I'm questioning, but CXWs, you could have gotten their bonds for really good price. And then the cruise lines, like you could have gotten Royal Caribbeans. You would have made a killing on Royal Caribbeans. Like it was pretty crazy.
I talked to Chris because he bought I told like I was so close to buying Royal Caribbean when it was like in the 30s. And he bought the debt though at the same time. But honestly, I hadn't even thought of the debt when I was looking at it. I was just debating the stock, but I got scared away by the junk. I shouldn't have gotten scared of it.
Yeah. Well, you see, like, so that's
because then it was just a question of will they survive? Is what I should have just been looking at it that way.
Mhm.
Will this business survive? Because it was so damn cheap at that point.
That's what I think is going to be really fun. Going forward with CM, it's like we're at a position now where it's like the portfolio. I'm putting its own handicap on it because I am keeping that amount of cash, and I view it as like, for example, in the recent deposits, I viewed it as a debt to myself. So I borrowed money for myself and invested it in equities, and I did 2 months of deposits, and I borrowed that, and then so these last deposits, they've all gone to the cash. So I bought preferred stock, and then this next month I'm going to do it again, buy preferred stock, then the debt's paid off to myself. And then the following months I can start contributing to stocks again plus cash. But that's what's cool now is like there'll always be a certain amount of capital now that's dedicated to hunting for, credit. So credit opportunities.
Well, if someone tried to blind copy you these days, good fucking luck. You ain't gonna do it the way he's like.
I mean, yeah, it'd be pretty impossible now. Or it'll be very difficult to like track everything. Cause like, did you guys see the Carnival Cruise play? Gil's gonna
I'm not
love
exactly
this one
sure
if
how
you're
you
still
did
on.
it.
Oh,
Yeah, Gil's gonna love this if you're still on, Gil, because if you like options plays.
You're hiding behind a paywall. You're part of the Matrix.
Yeah.
Whatever.
considering the paywall is so steep.
Yeah.
You're the problem.
At one point, CM had a $5 price tag on it.
Yep.
So,
Grandfather didn't, baby.
yeah, no, and forever. And I think, yeah, and I think the price is perfectly fine where it's at now. It's like the only reason why the price goes up is because, if we ever want to bring another person on after a certain new amount of new members come on, we're going to have the budget to bring someone on. So that'll be interesting.
You can't afford me, so cool.
I forgot what the rate even was nowadays. Like what it's bumped into.
$11.99, and
yeah, it's still low.
And I did it below what everyone voted for because I let the members vote for the pricing, and then what I did is I took the majority of votes as like the people who voted at the highest amount. If like everyone voted above, let's make up a number, $10, but $10 had the majority individually, and then it only had 20% of the votes, but 80% of people voted above $10. That's exactly what happened. So it's like 80% of the people voted for above the price that we ended up we ended up choosing like the price that was like just above the lowest price. But there was a lot of people voted for like $15, $16. So anyways, the point of what I was about to say is the Carnival Cruise trade, which was really interesting the way I did it. So it was earnings, blah, blah, blah. And I looked at Royal Caribbean. I looked at Norwegian. I looked at Viking. I looked at a couple other adjacent sources and compiled it all together, kind of looked at how is the industry trending. And I already knew from the discussions we had about what are the issues that Carnival has. The CapEx is coming offline for the island, blah, blah, blah. Cash flows, blah, 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 going to improve. The only question was, how is the demand? If the demand is really strong, then this should, in theory, recover. And that's the KPI that was the most important. So what I ended up doing is I still wanted exposure, but I didn't want to put for the capital that I was focusing on with other names. So I sold contracts at a very long duration. And the reason why I did that, for anyone listening, the reason why I did that is that you can get the most premium because time is further extended out. And so I got a lot more premium for those contracts. And I'll give the strikes away. I did a $17 strike, which we weren't even that much under $17 for the furthest out that I could do it, which I believe was December 2026. And then what I did is I purchased shorter duration contracts with all of the premium. So I created what's called a bastardized synthetic long. So with a synthetic long, you typically have the same duration and the same strike. I had the same strike. Sorry, not the same strike. Different strikes and different durations. So then the second one, and I decided to take on the lower risk by doing a $13 strike at an expiration of October. Yes. So that gave me a lot more contracts for the money. And then I was able to then now capture the upside exposure without being capped on the upside. And the capital came from, the options market itself. So printed money out of thin air in this case, because it worked out, And then I was thinking about what would happen if it didn't work out, if I was directionally wrong in the timing. That's why I went in the money, a little deep in the money. So then I could actually exercise those options, and then I would just hold the commons, and I'd have money trapped. That would be my worst case scenario that I would think. That was based off my confidence. So
this is so beyond my level of confidence.
I'm just chilling and vibing.
I was like, when you just like, I saw some of the stuff you guys do, and I'm like, I'm getting old. Like, I don't want to learn new things necessarily. So sometimes I'm just like, yeah, I'm out. But
pull up Gil's recent comment. It is not what Yield Max does. No, the other one.
Someone tell Fabio I'd rather just...
No, so it's not what Yield Max does. Yield Max creates a synthetic long and then sells calls on it. Yeah. And they don't even do the type of synthetic long that I did. Mm-hmm. I said I did a bastardized synthetic long because, like, with options, it starts to get, when it gets really complicated, like there's like going to be thousands of ways for you to really execute this. You can mix it up. You can do different strikes, different durations. You can play around with many different legs. You can do different kinds of spreads, all these convoluted strategies. What YieldMax does is they do a synthetic long and then they sell covered calls against it. That is stupid. And then they are doing like a standard synthetic long. A standard synthetic long, all it lets you do is it lets you follow the general upside without needing to put as much capital down, because you're basically doing a little bit of a different case. But yes, you buy the calls and you sell the puts.
Oh, I got to talk to you offline about, I have a video idea. I want to do, I'm going to use, fake money to do a wheel strategy.
Oh, paper trading.
I need like rules to do this though, because I've never done it. So like, I need like the basic rules, like what you would tell me, like, and then I'll be
trying to actually be successful with it.
No. Well, just like tell, like, this is how you do like the rules for doing a wheel strategy, like the most basic rules. And then I'll just do it for like 2 or 3 months see if I make how it works out.
Because you could be successful with the wheel strategy, but even when you're successful with the wheel strategy, you're gonna be capping your gains.
Yeah. So like you could just tell me like I want you to sell puts 10% or specific percentage out of the money or something, and then when to roll it. But I'm gonna start that after 4th of July, so I'm curious to see how it works out. Because I really I am going to do I when I retire, I'm gonna put the money aside. I want to do SPY wheel strategy at least for a year. See what happens. And then I can just stop. That's the best part about that, though. I'm not paying any fees, and then I could just stop doing it if I don't want to do it anymore. So
that'd be a really interesting experiment.
Yeah,
It would be.
Oh, Gil, is Gil here? Can we show?
Yeah, probably.
Oh, Gil, is this Micron options?
Apparently, he also bought Amazon Yield Max, so we're the clowns, Dan.
Is this Micron options? Oh, look, did someone make money on options?
No, it's a Matrix attack. You're just character assassinating me, bro.
Oh no, we can't. We don't know what we're doing.
Yeah.
So, anyways.
Yeah, I didn't have nice cool percent gains on Conn puts. Oh no.
That wasn't even when I sold it either.
Yeah, Perry never happened.
Oh, I have Perry screenshots I could send him if he wants. 300-400% gain.
Yep.
But
oh well.
Jesse's got the 1000% return.
He's irrelevant. I just don't care about the guy, honestly. He wanted me to unblock him, and this is why I kept him blocked. Yeah. No, you're a waste of my time.
Gil.
Yeah. Like I would rather watch paint dry.
I so don't care to. I don't even want to show you anything. That's the truth. And plus, I don't think you would send me anything I would believe, brokerage statement wise. I don't want you to get hurt, Gil. I care about you. If you tried to, I don't even consider myself. I'm not an options trader or anything. So I think you would try to do these QQQ put shorts, and you get crushed after a while.
That's nice of you.
He would end up just doing options on the market indexes, I think.
Yeah.
Which is not what we do. Brother, BB is going to own you.
Yeah. Because he pitched BlackBerry how many months ago?
Did he?
And he's been calling you a trader or viewing things from a short-term perspective. So
me?
Yeah, apparently.
Me. I'm short
term. Yeah, if we scrolled up on the comments, yeah.
Oh God, Gil.
Yeah, that's why I haven't unblocked him. Like, waste of time.
Yeah, there's no rationale here.
No.
What am I supposed to talk about? Like, how many times can I talk about owning Carrier or McDonald's or Tractor Supply for like a year on year?
Do I have your permission to buy more McDonald's?
No. I'd like you to sell it.
Just rip the Band-Aid off.
Sell it.
Rip the Band-Aid off.
I just want I want to get to starting out 100 shares. I'll keep it small, Dan.
That makes it worse.
I'm not McLoving this.
Yeah. Especially if it's holding port and it's small. It's always targeted for
that way, no. What I like to do is right now in my port, you got to understand psychologically, I'm driving around and I'm like, oh, McDonald's, I own that. Oh, a Starbucks, I own that too. Oh, Circle K, I own that too. Oh, wow, this is great. This feels great. It's just like walk into, Circle K, fill up my car with gas. I'm like, yeah, just paying myself back, money out my credit card, back in through a dividend, which I haven't received my first Couche-Tard dividend yet, but
yeah,
looking forward to it. And then, get my McGangbang. I'm just like, yeah.
You're in the wrong tax.
I made this happen. It's all because of me. I'm the money, right? I tell the drive-through attendant, keep up the good work. I'm putting a word in for the manager.
Oh,
to
God.
Corporate.
Yeah, and then every time I drive around, I see a Chase Bank. I just think of Fuhat, and Fuhat's like, "Why are you wasting your time? Could have just bought JP Morgan."
Getting a middle finger. No, you can go buy them. Go buy all the sandwiches you want.
Fabio's investing like Jeremy. No. It's after
my
the fact
God.
crawl. It's very different. It's after the fact. So after I bought it, I'm like, oh, because
I
before
go
I
to
would drive
stores,
by, I'm like,
guys,
oh,
and I follow 10 women and I see what they bought, and that's why I got Elf. Zoinks.
why does it sound somewhat like not Mickey Mouse, like Goofy? But no, wait, Jeremy does kind of sound like
Jeremy's like
does.
Goofy to me. That's what I always think of. He's like a slower version of Goofy. Well, folks, another day in the market.
well, folks. Yeah, I'll look at BlackBerry, but I haven't had any cybersecurity guys, Gil, tell me that BlackBerry has anything revolutionary.
Yeah, I haven't bought BlackBerry. I thought, oh, Gil's trying to pump and dump. That's
So my ETF, Gil, they consult cybersecurity professionals when they buy what companies to allocate to. So I seriously, let me see if it's in here.
Yeah.
Current day.
I mean,
holdings.
hell, Jesse and Andrew have both made their own cybersecurity pitches.
Maybe it's in here. Let's see. I'm curious. BlackBerry. No, not in here. And this is not just finance bros. They have professional cybersecurity consultants pick these companies. So
Yeah, and
not a
honestly,
good
like,
look.
there's some publicly traded companies, right? I don't know if you guys agree with this statement, but they're almost like their own ETFs in and of itself. So, like, example, like Danaher is a healthcare ETF of sorts. A Johnson and Johnson, you could make an argument because it has medical devices, it has pharmaceuticals, but it has huge pipelines in both. Somewhat used to be considered the healthcare bellwether back when Abbott was one company. That's what it was considered. But in the cybersecurity space, there's one that I can think of that basically has its fingers in all cybersecurity. Come on, it's Jesse's favorite, Palo Alto. They do everything. And I mean, CrowdStrike's just endpoint gods over there. But BlackBerry, I don't think they're known for anything. I think maybe encryption. That's what they were known for.
Look who showed up.
Hey,
I used your Twitter account earlier
as a reference, yeah.
SCHD Stan. He's living the good life with that big dividend increase. So,
how much was the dividend increase? 20-something%?
Or
20
almost.
cents, like
20 cents,
60 to 80s range.
Yeah.
Percent, not cents.
Oh, I don't know.
I think it was 20% actually. 24%.
Yeah.
So they must have had some supplementals in the beginning of the year or something that they were holding.
Yeah, I wonder where that 24% increase came from. If it was because they reshuffled some of the portfolio, went to a little bit higher yield, which is what my brain immediately thinks. I looked at their top 10 holdings. Some of their top 10 holdings, I mean, like Cisco. But
I didn't we do the redistribution? I think everyone does that video.
Yes, we actually did do a redistribution topic.
Yeah.
I was gonna go and download their holdings. I'm on their website.
You want your Home Depot exposure? Here you go. Don't like Home Depot price? I'm joking around.
They kept Ford. I didn't like that. That kind of sucked, I think.
Their website's just not working for me. I'm hitting portfolio.
Everyone was so excited. I mean, if you match this with SCHD, like, they don't overlap almost at all. Very little overlap.
Yeah, you mentioned it in the past as.
See, here's like, remember what we said? I would not have, if humans were touching this and not just methodology, I would not have sold Broadcom. So that was a bad. Nobody would have sold Broadcom at the time. I don't think. But
So I'm looking through their top holdings, right? You have so Amgen fine, AbbVie fine, Cisco, CVX fine, BLK. I mean, Coca-Cola is a bond, Verizon,
Yeah.
Texas
Lockheed.
Instruments, okay, UPS, Pepsi, okay, Pfizer,
Pfizer's
fine.
trash.
No, I mean like fine. You don't know if it'll recover, but it's a part of like a broad.
Shitty management. I hate
Mm.
Pfizer.
Yeah, Bristol Myers. You make the
Oh.
same argument. Altria.
EOG's my I like it.
EOG's good. USB. Don't you dare say something bad about USB. Valera. Ford.
The Ford one is I never understood. Ford technically falls in their criteria, but it's like such bullshit.
Yeah, it's a little, Kimberly Clark. I mean, like it's a kind of a bond as well. Paychecks. Wait, FAST. What is that? Fast.
Fastenal.
Oh, okay.
It's
Sure.
like
Don't know much about that.
it's like Snap-on Tools
Oh, okay.
meets Grainger. If you took Snap-on and Grainger together, I think that's what they do.
Okay. And then Hershey's fine. T. Rowe Price fine. MTB fine. YB fine. You're getting to some like.
Hey, there's the Dex
Ooh.
one.
Guess who has the line of credit for Conn?
Wait, fifth, third as the line of credit with Conn? Oh no.
I think they are the credit facility. I think they are.
Oh no.
The 650 million. Yeah, I think they're the ones.
Well, fifth, third's about to get clapped.
Well, I mean,
no. The Houlihan
I was
Loki
gonna
is
say.
coming to save them.
Yeah.
Which I gotta go on StockTwits and say like, oh, Houlihan Loki is coming to save us. Bullish, $40. Let's fucking go. I'm bricked up for some $40 cons. And that guy is so funny. He's like, why does everyone here keep saying that they're bricked up? I must be paved because I don't understand. I was like, dude, this is a StockTwits. And he was like, I'm bullish Conn as much as the next guy, but it is not going to $40 next week. I was like, dude, this is StockTwits. Stop taking it seriously.
Dan hating on Ford is un-American. FUT.
Hey, Whirlpool.
Ford was my best COVID investment, I think.
Whirlpool.
Yeah.
You guys forget this. Whirlpool was Jeremy stock as well.
Oof. It's
You
not
guys
looking
didn't
good.
know this. Yeah. He bought it as like a safe boomer stock, a dividend stock. That and Walgreens was the other one that he did.
Yeah, Lincoln. Yeah, man. Like, well, yeah. Obviously, it's low cost because there's no humans involved, and no human would have taken Broadcom out of it. I would have freaking made Broadcom like 8% of SCHD. Honestly,
Why did they take it out? Is it because
it
what,
ran
the-
it ran so high last year. The yield went down, right? So
Yeah, it's the methodology.
their methodology
Yeah.
cuts winners. Like, so I wish they would tweak that part of their methodology a bit so they could let companies run that are performing well. Like one more, like, I don't know. I would tweak their model just slightly.
What's the dividend growth ETF from Schwab?
SCHG.
Yeah, it would be G.
Or no, wait, dividend growth.
Yeah, dividend growth.
I don't think Schwab has a dividend growth.
They don't have a dividend growth because Drogo has Broadcom. I'm assuming they didn't punish Broadcom.
Let's see, holdings. You were right. Yeah, they still have it.
Drogo.
They cap the holdings, I think, pretty low. See, this is like, if you're really into dividends and you're like Ryan's age, I'd be like, this is the one. If you still want to say you're a dividend investor, like I think this would be superior over 40 years.
What's the yield on Drogo?
It's like slightly better than the market. Oh, actually not bad right now. 2.4 almost. Your expense ratio is really low. It's more diversified. I mean, and it does have dividend growth as a criteria. SCHD technically really doesn't.
Have they added Facebook, Meta, Google yet?
I don't think they would have.
Because they have to grow their dividend first.
I think, yeah.
So they're gonna add it. Yeah. So that's still like that's why I still will always be like I'm an investor, because I view it as like eventually they'll pay if it makes sense from the capital distribution standpoint, buybacks versus dividends.
I just think like they should look for the next Procter and Gamble, not buy the current Procter and Gamble. If these kids want to be dividend investors, what do you think will become a dividend monster? Like,
let's play that game. What do you think will become a dividend monster?
KLA.
KLA.
Ooh.
Okay, so going more so, yeah.
This Granger, I think Granger would be a good possibility too. This was kind of why I like this one. Their low payout ratio, and they were growing double-digit growth rate on their dividend. Although the stock's doubled, so that's why the yield looks terrible. At the time I bought it, the yield was like better than the S&P at the time. So 800 now.
Let's
I
go.
bought this at like 350. Yeah, get
Congratulations.
it.
Wow. Yeah, KLA has been a huge
350, Gil. 350. Get it,
Let's-
get it.
Assuming growth prospects might be questionable, maybe Chipotle might be a candidate down the road.
Wait, do they have a dividend?
I don't think they do.
No, but they probably would start at some point, because growth is probably going to start stalling here.
Yeah, because
This
it
could
seems
be-
like their international expansion seems to have some limitations.
Tractor
Like-
Supply.
Well, I should clarify. Growth won't stall. It was like they won't need all that capital to continue to grow. It'll grow by itself.
Oh, the split already happened. Interesting.
Yeah.
Mhm.
Tractor Supply, yeah, that could become like a not a Home Depot, but a strong retailer in its own right, providing pretty strong, solid dividends, buybacks, etc. Which has it pulled back a little bit?
Tractor Supply.
Yeah, a little bit,
Yeah.
but
Some,
Yeah, a little bit.
from like a local perspective.
Costco, I think, still has room to run for. I mean, if it pulls back, please, for the love of God. But Costco, I think their earnings are far from peaking, is what I meant to say by growth, and so therefore the dividend will be probably way higher in the future than it is today, in dollar terms. I'm not saying it's an amazing investment right now. I have no idea. Trying to think. I think Salesforce, believe it or not,
Oh,
will
really?
be, yeah. Oh, yeah. Because I mean, think about it. The longevity, the runway of businesses like Salesforce, I think is going to be much longer than what people think. And the products are going to be quite sticky. I mean, you could throw them and what's the other one? I always forget the other one. Not Workday. The other big SaaS business.
Intuit.
No. Well, Intuit's also actually Intuit's another candidate. I mean, they could always get clapped with the tax reform. That's always the fear with Intuit.
Well, the
Fed's
Fed's working on its own software.
That would clap them potentially.
Although I think the Republicans are I think they have lobbyists fighting it, because like all the Republicans mysteriously don't like the IRS having their own website.
Fuad says ServiceNow, Crawl says Adobe. Any of
I
those
think
possible SaaS?
Is it ServiceNow? It might be ServiceNow. I think it's ServiceNow.
For SaaS as dividend
Yeah,
monsters.
it's ServiceNow. ServiceNow. They don't pay a dividend yet, but when they do, I think they're going to be a monster. Their product's also extraordinarily sticky and entrenched. I saw JC said Alphabet.
Yep.
You destroy Dan. Gil, I'm a head mod in Capital Mindset. I could just time you out into oblivion. So,
good.
Go ahead, buddy. You can pay Fabio to sit in timeout.
Toast. I mean, Toast will be far away from now, but ideally, that's the destiny of every business. That's the thing. That's ideally every business is going to get to that.
Mm-hmm.
So, when you're investing in any business and you're early stage, if you invested in the right business after, let's say, 20 or so years of it being public, it's probably going to be spitting off some form of dividends. And hopefully it was a company that had also grew its earnings, et cetera. So your dividends at that point are going to be quite juicy. Like, for example, I'm actually seeing that with Meta. My Meta yield on cost is actually pretty freaking good. It's not nothing to sneeze at. And I imagine that when the dividend growth starts to hit, I'm going to, on a yield on cost basis, it's going to grow really fast.
See, this is what I always like about dividends. So now, so Meta, so now they have their meetings about to do their money. Before, without a dividend, he could just spend all the money he wanted on Meta, right? Or on the metaverse. But now he has to justify to the board and the investors to say, no, I want to put money into the metaverse instead of giving you a dividend raise.
Yeah.
And then the question is, well, why? What's the return on this investment compared to a dividend raise? So it's like, it's a process that I like to have companies have.
Yeah.
Like a consideration. It doesn't mean he has to give it all back, but they have to go through this thought process, you would think, now.
Yeah.
I was just going to squeeze in. I can put a bit to the side. Commenter asking about our house, which I've actually done some digging on.
Our house.
Yeah.
In the middle.
Whose house?
Our house. Yeah, it's a home furnishing company.
I've never heard of this.
Yeah, they're integrated all the way through. Like they design, they retail, distribute, all the whole thing.
Special.
The thing to look out for, and they already mentioned in the most recent earnings call, is they're in the process of rolling out an ERP system, which naturally should make people a little hesitant, and by little I mean a lot.
Lamb Weston.
Yeah, but it seems like they're doing it in like phases and stages for like different departments. So, assuming it rolls out okay, then or worst case scenario, if something happens, in theory they should be bolstered, but it could cause some violent moves that are not preferable. So that's my insight into our house. But yeah, interesting little company.
So what's the dilemma? Wait a minute.
Rolling out an ERP system. So like, enterprise resource. So like,
it's what happened to Lamb Weston. If you wonder why did Lamb Weston fall the way it did and get cheap, ERP system rollout failure from SAP.
Yeah, and Nike had a very high profile screw up where, like, depending on how your enterprise resource program is integrated, it could do everything from screw up your inventory, your invoicing, like pretty much everything. So like it's
a new software or manufacturing.
Yeah.
Fuhad, I'm with you.
They're rolling it out in phases, so it's one where like maybe for the radar if you have
3 fingers. I think it's 3 fingers.
Yeah, if you have better insight, then maybe the opportunity's there. But that's my value add. Sorry, I couldn't help much. A SCHD stan, but
Lamb Weston.
Potatoes.
No,
I didn't mean for this to happen, Dan.
No. Fucking people. Buy my air conditioning company.
Aeon.
I got the same people doubting me from the last time I gave the people a quality good company. Same shit. It's like, okay, fine. You want to miss out on the gains, so I don't have a strongest feeling about that as Curtis Wright though, but
yeah, Curtis Wright was a monster.
I enjoyed it.
Yep.
Yeah, but you still.
Oh no, we lost Dan.
Oh, he did the thing. All right, we took over. Frat on top. Frat on top.
But I'm not a frat boy.
Oh,
Frat
boy.
on top. Oh, he's back.
I closed myself.
Frat on top. So, okay, do you still think like Curtis Wright at this price? Or because like when you pitched it, no, I will say
it was like 190.
Yeah, that was still a good price.
I'd have to, if I was going to buy more, I'd have to see like how the manufacturing's going. Are they fully? well, at the time we talked about it last fall, like they were only at like half of the production capacity on the submarine, the Virginia class. So I doubt that's changed though in what, 8 months.
Yeah.
So
how is Huntington?
because the potential is there though, that they're gonna be, I think when they fully get it running, it'll be 4 subs built at the same time. Then you hope they'll increase efficiencies and get better at the production. I mean, I don't know. It's a tough to buy more.
You don't think Huntington Ingalls is well positioned though for just basically steady Eddie earnings increase?
No, actually, when we looked at the budget, I don't think they had money to put aside for new carrier construction.
I don't
this
think
year.
so either.
So I wonder if the stock got clapped on that a bit. I don't know. I haven't even looked. I mean, actually, that doesn't surprise me.
When I was listening, okay, so
because they didn't get any new carrier. The carrier funding was pretty dry this year in the budget.
Well, we already have so many carriers. Layman understanding, right? Are you talking about new carriers or upgrading or
New
all of it?
carrier.
Yeah.
Would we need new carriers?
I mean, there's a retrofit of the new class, but like this budget year, they didn't get anything new. Last year, they got pretty big jump for that for construction, but I mean, the carriers are going to be built for like the next over decade. I think there's 4 or 5 more of the new class. I'm not sure at this point.
Wow.
I don't hate this as an investment. I mean,
because
I just thought when I looked at the submarine stuff last fall, I thought,
yes, the other one was better.
I started looking at General Dynamics and Huntington, right? The people building them, and then I worked my way into the suppliers, and that's where I wanted to be. So
like Huntington, I mean, I'm looking at their balance sheet. They have $2 billion in debt. They have a decent amount of free cash flow. Call it like $400+ million in free cash flow. Pretty robust pipeline.
So you want classic Northrop Grumman investment.
Yeah, it's like
so you'd be like an OG Northrop guy now if you bought this.
Yep. Because they pretty much have a monopoly though. Because when I was reading into them, it's like no one has the dry ships anymore.
Like this is a mode of moats, right?
Yeah,
We're
no
not
one can
building any more
that.
shipyards. Like,
oh, I said dry ships, shipyards, but yeah, no one can build those anymore.
Mm-mm.
There's only less and less of them. And what I was reading from, again, layman, so I rely on people who dedicate their time more to, warmongering, if you will, but or war planning, war strategizing, whatever you want to call it for that kind of content. But that the U.S. for the Asia theater needs a lot more sea power than just carriers alone.
The build out in the Navy, the Navy budget is huge. It's freaking. I don't hate it. I mean, I would think this is a better. Actually, I wouldn't say it's better than McDonald's. Tough call.
I'm not gonna fall for that. I'm not gonna fall for that. Very nice try, Dan.
I mean, only Chads buy this over McDonald's.
No.
You just live in the dark.
I see right through it. You were like, yeah, this is a good one. Yeah, this makes sense. Yeah, it's better than McDonald's. Better than McDonald's. Yeah. No, you're not gonna get me to sell McDonald's that easily. No. I'll buy them both.
I guess what's the risk? They just pull back on. It's very expensive, and they could just pull back on shipbuilding projects if they had a budget crunch.
The U.S. government,
yeah, because they've done it before. They've just delayed like shipbuilding. So these plans go years and years in the future.
I'm gonna lobby, Dan. That's what you didn't plan for. I'm going to the White House. I'm gonna be like, look, listen, we need to make sure this budget gets through. Why? I need to increase my stock price by 15%. I have call options on this.
You're gonna have to see what Congress people own this. What do they know? Is anybody in Congress buying this? Like, seriously?
Because it is relatively sold off, and they do literally only do two things with the capital: buyback stock, dividend. Buyback stock, dividend. So,
Yep.
and I don't see any competition. Why did Northrop just wanted to focus on like the higher growth, sexy areas, and get a higher multiple. And they're like, we'll dump, man. But wow, if you had kept these shares, I don't think you'd be pissed off. Like from the original spinoff,
They've literally never. Well, a trickle. Yeah.
yeah, no, it's down. So if you look at percentages for the past, let me show you the past or tell you, 10 years, it's down 20.24%. The past 5 years, it's down 6%. So it is small in the past 5 years or so, because I believe there was like some upgrades they had to do to their shipyards and something about unions and labor, blah, 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 expensing.
Mm-hmm.
So buybacks did stall it down a little bit, but the slope of the line is actually getting steeper now.
Interesting.
Yep.
This could be a good option.
Could be.
But not better than McDonald's. The same.
Ballpark.
It's cheaper than McDonald's, you know.
So let's buy then, obviously, because value investing has taught us you buy the cheaper PE ratio.
Always.
That's all you do.
It's just that easy.
You catch every falling knife, right?
You get cut in the hand. Yeah, man.
Yeah.
Value investor.
Oh, 2.5 hours. Oh my god. Yeah. Oh, I gotta hit the sack, I think. So
all good. Thanks for having me on.
Thanks for having me.
Tomorrow, Fabio will list all his wins on options for Gil in the video categorically. So we'll see what tomorrow holds for Mr. Portman. Poor Mr. Portman.
That guy.
Poor man.
I tried.
He deleted the comments, so.
Yeah.
Oh no.
No, he deleted Andrew's comments warning him. So
yeah,
it is his fault. What happens?
Oh well, we will see what holds. So I probably won't do one next week, people, because it's 4th of July. Why are you in front of a computer? It's 4th of July. Go celebrate America. Blow some of it up. So I'm going to go to Rhode Island. So that'll be fun. Dude, Rhode Island. Yeah, Fabio, you got to go to you would love Rhode Island, I think.
I've been there one time.
Newport's fun. Plus a bunch of other millionaires like you'd fit in. So you got to see the Vanderbilt house though. That you've got to see it. I can't even describing it doesn't do it justice. It's pretty wild. The original Vanderbilt, not one of his crappy kids, but
yeah.
You're like, oh, that's cool. He painted that ceiling. And they're like, oh no, that's not paint. That's imported leather from Paris. You're like, or you think it's wallpaper. Or like, no. And then it's like, oh, that red stone was mined from one specific mine in China and imported for this building. You're like, what the fuck? Oh my god.
All the water doesn't even come from here. It comes from mountains halfway across the world.
But it's two houses. It's a mansion, and then there's the servants stuff underneath it, and they're not attached. There's two separate entrances. So it's a whole nother house where the servants are and their kitchen and stuff. It's pretty cool. The china cabinet is 2 stories tall.
Jeez.
So you go to the basement and you're like, oh, there's china, because it's like a glass walled room of 40 different types of china. But then you look up and it wraps around above you too. So they had 100 different sets of fine china. But
the opulence.
But it's so cool. And then the first floor of the house, because like imagine if you were that rich but you don't have TVs or internet, right? So their house, each room has a specific purpose, and they would cycle through the house during the day. So because you don't have a living room with a TV, so you have like the morning sitting room, and then you have a grand parlor, then they had a game room, and then they have a music room. So it's like a circuit every day. So it's pretty fun. It's fun to look at, but
Giving
I'll
Fabio
go. I'll
ideas.
visit.
he'll be like, I could move in.
I can move in.
About-
This could
about
be
for
me.
This could be me.
This could be me. No, I heard Rhode Island has bad tax policies.
Yeah, the
Well,
house.
no, you live somewhere else and you just plop down your mansion somewhere.
Houses are expensive there. I was looking at stuff that was like, I couldn't believe it was like $2 to $4 million for like a 4-bedroom house. It's like,
Jeez.
yeah, Rhode Island's not cheap.
Wait, can you believe this? Fuhat added me to this guy. A guy from Sense going like, has Fabio made any trades recently? He's in the free. I'm gonna take his free membership away. F that.
Uh-oh.
Whoa. Uh-oh.
Yeah,
Rest
'cause
in
he's
peace,
the-
Fuhat.
He's no, not Fuhat. No, Fuhat's letting me know.
Oh.
Yeah.
Someone else.
Good job, Fuhat. No, this guy's like, what the hell? Because he's asking us if I made any trades recently, and then someone answered, yeah, and then it's like doing better than the SP 500, and it's like this guy just wants to copy. He's gonna add no value to the club. So, yeah, it's like you're gonna add no value. I don't understand why would even let you in. Because that's all he's gonna want to do. He just wants to know if I'm beating the SP 500. He's like, oh yeah, no, get out of here.
This is why you brought in options and crazy stuff.
No,
Trying
they
to- you
can't
can't
be
follow me anymore. I dare you.
No, Fuhat, not that guy. That guy you're getting along with. He's fine. The other one. I saw what you added me to.
Well, thanks for coming on. And then also Andrew and Jesse were earlier. So stay tuned for Fabio's whenever the hell he feels like it. So
Yeah, whenever
he doesn't need you people. This is you should have for the videos be like, hold on.
Are you not entertained? Are you not entertained?
That's pretty much Fabio. All right. Well, thanks for watching. We will see you later.